All right, folks, we're going to be starting here in a couple of minutes here. My name's Rodrigo. We'll be here with Nick Shaheen. In a couple minutes, we'll be starting, folks. We'll see you in a bit. Um, we're going to be discussing trade ideas, options education, setups here with Nick Shaheen, lead trader from the Options Inner Circle chat room. Big shout out here to Rennie Samuel. We got Joyce, Karen in the house, Bruce. All right, folks. So we're going to go ahead and get this thing started. I believe we have Nick in the house. Let's go ahead and bring him on.
He is in the house. He is in the house.
Big shout out. I know you just got out from this session you do every Sunday, right?
Yes. And also, I was actually literally just pasting code from one of our people. A member just shared with me code that you will see in a second. I just pasted it in my charting software that highlights the quarterly, monthly, and the quadruple witching expirations. This way, if we're not sure, we can just put it on the screen. And I thought that was pretty cool. Okay.
Right.
So
these were all the tickers from today. Is there any particular ticker that stands out from the Sunday session that you did?
I tell you what stands out. I know you're eager to talk about this. The theme, and we'll talk about it in details. How about I take over the screen and we'll go from there?
Yeah, let's go ahead. Let's rip it here.
Okay, so I'll take over the screen and I'll speak to what stood out. We are talking about SPY. Let's see, will that give us what I want to share? Yes. Okay, so you're watching the SPY. What stood out was the fact that we have had an extremely violent week. The reaction to the CPI didn't cause the drop. The reaction has been technically on the books for a couple of weeks. 3520 in the S&P was my target if we didn't recover a neckline, and we didn't. So the CPI jolt was an emotional reaction that took us to where we were supposed to go. It took us faster. And some things happened where on the reaction, it was so violent and so broad that the bears have extreme wins that turned into extreme losses within 2-3 hours. The bulls had extreme losses that turned into extreme wins in 2 to 3 hours. You rarely see this. You know, that reminds me of February 24th, when we woke up to the Ukraine war. Big giant drop, big close that was positive. So what do we do with rallies? We sell them because that's what's been going on. Look, that's a rally that sold, that's a rally that sold, that's a rally that sold. That's why we have a descending channel. So the strategy in the Sunday charts, with all these charts that we did, and it was 2 long videos, is we might get a bounce. If we get a bounce, assume it will be sold. And that's the important part. Assume that the low we formed will be lost. I want to assume that to be ready. Okay. If I buy calls or if I chase upside and think that this was the bottom, I'm making a mistake, even if it turns out in hindsight that that is the bottom. So what we do in the chat room, by the way, to give you an idea, this is the chat room where we hang out, hundreds and hundreds of us. And this is a chat room that's available for anybody's time frame. If you have a job or you have a family and you cannot be active during the day, that's the place to go. I'm yours there 24/7. That doesn't mean I'm waiting for you to post something. It means I answer questions all day, every day, any day of the week. And on top of it, we have something called the live room. That's where we actively trade all day. So not only I'm available to you to answer questions in the chat room anytime you want, in the live room, I'm available during the market hours, sharing my screens with the microphone. So you won't see me because I'm sharing my screens, more than one. And we are actively trading the market. Last week, we did pretty well, including the Friday close, and I'll describe that in a little bit. It was an iron condor. It was extremely important. It was like a Wall Street bets type of an environment. A whole bunch of retail traders, us, beating Wall Street at their own game, doing well with an iron condor that was $15 wide, that delivered $400 per contract out of nowhere within like 40 minutes of the close. And I did not need to be surgical. And also in the morning, I said, book your calls, book your calls, book your calls. And that was the top of the day. So we do good work in the live room for somebody that can be there. If you cannot be there, you can be in the program, but in the chat room where are the slower trades posted. And these days, all trades are tricky. You cannot set it and forget it. We had a whole bunch of trades that should have expired for maximum gains last week. They all went to maximum losses if somebody didn't pay attention to them. So the olden days of those trades, I usually can put them and not worry about them. But in this environment where it's so active, we cannot do that. So through all of these charts that the members have asked for, a common theme, we placed a pretty strong floor, that tick right there. This is the S&P, and we better hold it. That's the theme. And if we get a rally, Monday, Tuesday, Wednesday, we should assume it's going to fail. And we should also, that's one, so we don't chase late. We should assume it's going to test the floor from last week. So I shouldn't buy puts late. And we can safely assume that they will try to break through it. And if they do, another whoosh lower. And here's the thing, the bears have already broken the neckline that points towards losing 3,000 in the SPX. What? I don't want to scare people to say that that's where we're going, but technically, let me take that stuff out. Okay, technically, if we don't recover this zone, that's the June low, which we're below. Last week, on Friday, we teetered above in the rally in the morning. We closed below in the afternoon. I wanted to close just at or just below. And look what it matches up with, the prior base. That's the pre-pandemic high. That was an all-time high. We crashed through COVID, recovered it, fought over it, and we placed the base, and we're into that base. Logically speaking, the zone here, so super strong. But look how wide it is. We're talking from the lows from last week, 3,500, to 3,200. My technical target, the worst case scenario, is 1,100 points. So 2,500 is reachable just from the chart perspective. Assuming this is ABC stock, And if you tell me they cannot recover the zone that they tried to recover last week, I would tell you they're headed there. So any rallies here, any potential rallies, I would take them with a grain of salt. They're going to hit levels that have been selling off. They're going to fade. How low they go is the important part. How low they fade. If they test the lows from last week and they lose them, they go here and they repeat the process. Notice, rally, fade. And that's what they're doing. Rally, faded, and they couldn't hold that, and it became a problem. See how it's happening? Rally, fade. Those are not coincidences. That's how you end up with a descending channel, right? So next week, this coming week, if we rally, assume we're going to fade somewhere and assume we're going to test this. Now, if we don't and we maintain a higher low trend versus the lower high trend, we're going to come to blows in the next 10 days, 12 days. We can fade there and come back and test this. At any point in time, we lose this, we're coming here. That's the low 3,000s, 3,300 to 3,100 or so. So imagine we're bleeding lower until we lose 3,000. It's doable. I hope we avert it because it just doesn't make sense logically. There are so many stocks that are super cheap. They can get cheaper, but they are super cheap already. That I hope we have a rally that is sustainable. We make some progress. We pop above it, come back here, higher low, come back here, pop above it, come back, higher low. So we have progress. So suddenly we have buying dips opportunities. And then this will be a major one. So here's the scenarios that are playing out there. I want you to be careful with that. We rally Monday, Tuesday, boom, big crash. In the next 2 months, there should be a big washout moment, either a big crash or a big rally that just changes things completely to where not even the bears can withstand the pain. If for whatever reason we take this out, I think the bears will be running for cover and these two will be iffy and we will get an all-time high. What? You just said 2,500, now you're saying all-time high. That's how crazy we have been trading, okay? There are no experts. So go with what you know, go with logic, go with facts, and I'll give you another fact in a little bit to watch out for, and just follow the price action. Don't have too many opinions. I know that the market is full of puts right now, right? Is there anybody that doesn't own puts? And then they got shaken out by a small rally. But predominantly, there's a giant mountain of puts below. What are puts? They're options positions that are bearish. So who sells these? Market makers, right? The people who, the casino comes out and says, here are your lottery tickets, here are your lottery tickets. So everybody's loaded up on puts, but they immediately want to hedge themselves and take the opposite bet that they just provided. Like if you wanted to put, they sold it to you. They're not trying to make money off of you losing money. They're trying to make money off of the transaction. So in order to win, they have to go out and hedge their bet by getting short the market, because them selling the puts is them long the market. So then they have to be short the market. That's why the sell-offs are violent, because the dealer is going with the price action, was falling. So they're going shorting markets and it's a mess. But at some point we will bounce from those puts because they don't want to pay out all the winnings on those puts. So they'll try to make them expire worthless. That's a long, convoluted way of saying we should have a whoosh moment that scares the bejesus out of everybody. And then Powell will say, maybe I'm done doing damage. Right now, he doesn't have any pressure. The Fed does not have any pressure on it to stop what it's doing, even though I did not verify, please look at your own data, that this has been the highest rate hike, the fastest rate hike ever in history. Whether he designed it that way or not, he's doing the most damage it's ever done in history. That is a lot to say. For example, I believe the 30-year mortgage now is like 3 points higher than it was before. Imagine you started shopping for a house. You went into a contract for $1.5 million. and you thought your payment was going to be $6,000 based on a 5% rate. Well, now it's probably 7.5. I'm not sure, but that $6,000 is no longer $6,000. So now you have to nix that idea, either not move or buy a smaller house. So he's doing damage. At some point, enough people will start talking about it. I'm starting to hear peeps out of like Diamond and such, putting pressure on the government. Hey, we were paying attention. What are you doing? You're breaking us. The government includes everybody, not just the White House. The White House, the financial government, everybody that's in charge right now. They are all okay demolishing us. I can't believe it, the strategy they're taking, but that's what's going on. So you got to take care. So any rallies, look, I'm not making this stuff up. Just go with the flow. Any rallies, if they come, assume they will be sold off. And to be even safer, assume that the floor will not hold and we will breach and we will try to rally again. That's what's going on. So until things change, that's what I should assume. Ready to take the opposite side. Months ago, I said, we probably bottom towards November, December, and there's a good chance we will have new highs by next year, because the Fed will break something and we will have to go into the market and do something to fix that breakage. Bank of England kind of did the same thing recently. They were raising rates aggressively, and then something broke or almost broke inside there. I don't know if it's called the bond market or not, but the pension funds. So the pension funds were in danger. So what did the Bank of England do, the BOE? They decided to go into QE mode for an emergency stint of 2 weeks or 10 days. I'm not sure. Do your homework. I'm not up to speed on the news. Maybe that ended. I thought it was going to end on Friday. Maybe Monday they'll say, yeah, it ended, and then the markets will freak out because everybody expected them to extend it. I don't know. Read the news. I don't trade news. I traded this whole week without a bit of news, and I did just as well as I would have anyway. So the news is not necessary. It's fun to watch if you like the news, but for me, it's allergic. I'm allergic to news. I don't need it. Okay, so what do we do in the live room? We trade the hell out of this market pretty well. I'll give you an idea. The SPX, that's the index, right? The SPX, it's the S&P index. You can't buy the SPX. There's no deliverable. You can buy options on the SPX. It provides, this is an options table from E-Trade, my practice platform. I'm not recommending it. Do your own homework. I particularly do not like this platform. It used to be good. Now it's full of bugs, but it does well teaching. So the SPX, look, Monday, Tuesday, Wednesday, Thursday, 2 on Friday, Monday, Tuesday. That's a monthly contract. So the SPX now expires every day. Imagine waking up tomorrow and putting a trade on that expires tomorrow that pays 20, 25%. We have those. Imagine that trade being not needing a rally or a drop to win. We have those. So if you paid attention on Friday, you could have sold, you could have put a trade on that says this type of a thing. These are not exact numbers. If Monday, the SPX is between this and that, I make 25% on my risk. And these trades do not require a big account. I can make $100 by risking 400. So that's 25% yield, 1 divided by 4. So if I had a $2,000 account, I can do this once a day. So those are available right here, right now, using the SPX. The SPX is the index. And here's the best thing about it. You cannot be assigned. So if you try to do this with the SPY, late in the day, if you have a smaller account, the broker will go through all the trades that are open and they will force close the trades that are at risk of assignment. So you go to close your trade, you're thinking it's there. Like, where's my trade? No, your broker closed it. They don't do that on the SPX because it is cash settled. What does that mean? It means that there's no assignment. So if price is actually in the money, if this was my spread, let's say this was my spread, if I sold this and opened that, and price closes here, I'm not going to wake up owning shares. Nope. After the market closes, wherever, if I sold at 35.80, where did it close? Okay. and it closed at 35.83, I didn't lose any money. I made money. Let's say I sold the 35.85 and it closed at 35.83, then I may have lost $2 minus what I collected. So if I collected one for an iron condor, I lost $100. So I tried to make 100 and I lost 100. Big deal. It happens, right? So, but it's cash settled. There's no assignment. That's the cool thing. I know this sounds pretty wonky, but if you know credit spreads, which is what we teach, this is a basic, easy trade. Now, on Friday, I mentioned we did a lot of money. So I thought on Friday that we would close at 36.10 with an hour and a half to go. So I set a trade that was $15 this way. And actually, I might have a picture of it.
Right. Nick, really quick before we get on the session to get a feel, folks, everybody that's here on the Zoom chat, also on YouTube as well, if this is your first time watching any of these sessions here, put a 1 in the chat, put a 2 in the chat if you've already been here before, so we know where to take the conversation here with the chat today.
Yeah, that'd be good. I wonder what I did with it. Nope. It's on the SPY, could it be? Oh, maybe on the S&P futures. Anyway, I thought I drew it on the chart. I could have sworn. I know. Hold with me. Bear with me. Load layout. Show. Yes, that's where I did it.
Yeah, there's a ton of ones in the chat there, Nick.
Cool. Ton
Several
of ones
twos,
that don't know what this is all about. I'm just going to show you visually what it looks like. Okay. So this was the action 1 minute chart. So it's pretty fast paced action on Friday, right? So within an hour of the market closing, I said that there's a good chance we close inside this green box, right? So I said, let's take a trade that would pay us $900 at the risk of losing $600 with minutes to go. And the trade paid us $400 out of the $900. And I immediately said, get out, book your profits. And then this happened, and then get out again. And then this happened. So somebody listened to me, they made $400 out of thin air, and it was an easy trade. Now we didn't close ideally. So if somebody did not close their bet and let it die, they lost the $600. But there's no one in that room that did this because they were listening to me screaming at them to close it. Same with the morning. So when the market rallied in the morning, I said, we looked at a whole bunch of other things, including some new studies that I'm teaching myself because of members. So the member comes in and he says, hey, you should use Ichimoku. I was like, I know what it is. I just don't need it. They said, look into it. So because I needed to talk to them about their Ichimoku, I started educating myself on it. And now I'm pretty good at using it. And I used it to say, get out now and look at what happened thereafter. So we are adding tools. So what do you expect if you join the group? Here's what I would do. If you joined a group, because this seems like exciting. And do we have a money back guarantee today, Rodrigo?
Yes, there is a 30-day money back guarantee on the chat room.
So if there is a 30-day money back guarantee, you got nothing to lose. I'm going to first promise you that joining the group, you will be a better trader wherever you're at, however you trade. I guarantee it. I guarantee it, because I became a better trader but from being in my own room, because I just told you I learned at least one new discipline this month. In the last 6 months, at least 3 new disciplines that I use on a daily basis now. So that's my promise to you. Benzinga's promise is that you can get out in 30 days. And if you do sign up, use the 30 days, because the first 10 days are going to be confusing. There's a lot going on. It's a fast-paced room going at your speed. You'll see a lot of things that go whew, and then you ask in private, in public, and we will answer. And suddenly you'll have fewer things you're missing. But however, you join, the first thing is you go into here where we have videos walking us through the basics. Like, what is a put option? What is a call option? What is a spread? What is the credit spread? What is the cash settled index, which is what I just mentioned earlier. The SPX is a cash settled index. So you have some things to see. You're not just jumping in blind. Also, you can jump in here and say, what was the blah, 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 whatever question you pop in here, like this person, what is the reference code? That's earlier today. I said, well, it's the password just changed, but the reference code is in the write-up. Here are the 2 videos I posted and the spreadsheet that goes along with the videos. So this room is buzzing even on the weekend. And that is a resource. You have me as a direct message or in the public's sphere. So this is the slow static chat room. Nothing happens live here. Every morning I post my morning write-up and it's complete with what do I expect from the day and links to the live room with the password. So you join me in the live room if you have time. If you're lucky, we have 300 and some people there every week, every day. Between 280 and 320, we've had almost 400 at one point. So those are live traders in there every day, watching my screens like you are watching right now. We're looking for entries and exits, and we get a lot for if you're fast enough. I'm not that fast. I like to do those iron condors I told you about. Also 1-day trade and sometimes 2 days. We discuss other people's trades. 2 weeks ago, somebody said, I think Baba is going to rip. It's hot, it's juicy, whatever they called it. So I looked at it as like, I agree, I'm on. We got 50% in 2 hours. It was not my idea. Somebody brought it. I looked at it. I agreed. We jumped on 50% in just 2 hours. And if you held it for a couple of days, you may have been able to do more if you were savvy by selling covered calls and such, which is what I did. So, and I shared the lesson. So I would say, okay, I'm going to do a covered call and we'll go into a lesson. Here's what happens with a covered call. You can do this and whatever. So we go into mini lessons. All right. So so you have resources and videos. You have resources in me and other traders in here. Like this guy, Red. My 1 year is coming up next month in this chat. That's awesome. So look, been it worth it. So they're talking to each other. So they're good at what they do, and they choose to be here because there's so much production. It's easier to trade in groups, I promise you. So Wall Street Bets is not a coincidence that it's beating up on Wall Street itself, because they're trading in groups. You make fewer mistakes, you collaborate, the ideas get better vetted. The ideas are plentiful. More ideas, like the Baba idea came out of nowhere.
Right.
So,
And Shelly has a good question. This is primarily for day trades?
no, the live room is where day trading happens. But if you're in the process of making yourself a better trader, you're going to accomplish that here. So I'm focusing on education. In fact, last week, we got together with a whole bunch of Benzinga brains, basically everybody on this list here. So first of all, it was a humbling experience to have everybody in the room. But the goal was, I know, I verbalized my goal of me being an education room, not a trade alert. If you're coming just for trade alerts, I think you're missing out on the goal that I'm trying to get to, where you create your own trade alerts and share it with me so we can all profit. So I want you, everybody has strengths. If you have a strength, you know this inside and out. I want to leverage that strength, and I want to teach you other people's strength. Let's see how we can make your skills better, and let's introduce you to new skills. Either use them as people post or incorporate them somehow. Like if we have an expert that knows how to do pitchforks, and you don't have time to learn pitchforks, that person is posting their pitchforks in there all the time. So I have at least 5 people that post charts solid. I mean, I look at these charts and like, yep, these guys know what they're doing. You can trust these lines. You can trust these comments. We have people that post, okay, we're testing VWAP. Whether you know VWAP or not, I usually see that comment and I say, here's what they mean. Testing VWAP as the stock market is rallying means it's going to have some resistance coming up maybe. So don't buy calls right here. Wait to see the outcome of that test of the VWAP. So is it a fast-paced? It is fast-paced. But if you have a slower pace question, I will do that. with pictures. So it's basically a classroom open all day with opportunities to make money all day. If you're here to learn, you're going to learn. If you're here actively trading, you're going to have the active trades. I usually say I would buy calls here, I would exit my calls here. Case in point, if somebody listened to, I had a direct message, I should have printed it. It came via email. And they said, thank you. The gist of it, I'll try to pull it up on a different screen while I'm looking at you, talking to you. And the comment was heartwarming. I mean, I was like, it was amazing. Let me see here. Was it this guy? No, anyway, the comment was, I would have lost a lot more had I not listened. I would have lost a lot less had I gotten out exactly when you were screaming, but they still were able to do better than they were on their own. So I forgot the words, but anyway. So I share potential pitfalls during the day. So it is an opportunity to become a better fast trader and become a better trader all together. Okay. So the answer is, it is whatever you want to get out of it. I'm here to help you become a better trader. I'm here to do your homework for you on Sunday. This list is not for me. I don't need these stickers. I would never trade these two, for example, or this one, or this one, or this one. Campbell Soup, that's a funny story. I would trade Costco. I wouldn't trade this one. I would never trade this one, or 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 this one. I wouldn't. But I answer all the questions, not for me, with comments and clickable charts for you to take them home. So I answer the questions, right? So I do the homework for you on Sunday. These are the stocks in there. And I do it twice on Sunday, because at night on Sunday, tonight, in a few hours, when the future is open, I jump on here and do my videos for the week. And the message is going to be alarming. It's going to be, hey, whatever rally we get, please shore up your account. Don't chase it. Fix whatever was broken. I've been saying it for months. People sometimes are late hearing it. They see a rally, they feel better about their positions, even though they're still red. They add more to the position to recover faster. Stop adding to your position. You're making your problem bigger. The only time I add to my position is when I actively want to increase the size of my risk, but I'm still nowhere near my maximum size. I'll give you an example. I want to be long Bitcoin. Yes, we do crypto. I want to be long Bitcoin. So instead of buying all of my allotment at once, I know I'm not going to be able to nail the entry. So I would put in a potential 20% size. And if it drops more and I want to add, it would have to be a sizable drop, not 10%. I would add another 20%. So I have a winning trade in Bitcoin, right, in crypto, and I shared it all along, including last week. I made money out of crypto last week by saying, hey, if you don't know how, like, first of all, I'm going to tell you something. The scariest thing about investing in Bitcoin is not the price itself of Bitcoin. Bitcoin is foolproof in concept. It is the best performing asset in a long time. That's a fact, not my opinion. And so the riskiest part is which platform, where do you put your money, right? So I have my money in crypto.com, which every time it takes too long to load, this is the day I'm saying to myself, this is the day I can't log into my crypto and I lose my money. So that's the scariest part. Well, guess what? If you trade it via Bito, Bito is a ticker that trades inside your Schwab account or inside your E-Trade account. So you're not worried about where your money is. You're only worried about the price action in Bito. And this tracks the Bitcoin price, the Bitcoin futures price, excuse me. And by the way, don't mind my black eye. I fight for a sport. And yesterday I took on a bigger opponent than me and he caught me with one punch. It was a fair fight, but one punch went through my guard and gave me a black eye. So I sold puts because I wanted to own more Bitcoin. So if I wanted to own more Bito, I would sell a put. And I would say, hey, anybody that wants to sell me their shares at 11.5, I'm a buyer for a week. And they paid me. So they paid me hundreds of dollars for me, my promise to buy 1,000 shares of their Bitcoin. And if it didn't come, not 1,000 Bitcoins, 1,000 $11.50 ticker called Beto. And they didn't give me the shares, therefore the hundreds of dollars are banked profits in my pocket. I repeated like I can sell this and collect almost $300 and make the same bet for this week, which I did. So I maybe put shares of Beto at 11.5. My break even point would be 11.2 ish. And that's fine with me because I'm still trying to build a full size position. So that's one trade I just gave you that I took last week into this week. And the worst case scenario is me being forced to buy my shares at 11.5 and break even at 11.2. So I can repeat that for December and do it at 9 or 8 or whatever. So there's always something to do. And the discussion is ongoing 9 hours a day. Before the market opens, I have 200. And by the time the market closes, we've seen 300 people. And we're discussing all the opportunities. If you have a question, hey, I'm stuck in the trade, how would I handle it? We will discuss it.
There's basically live trading support, right? Which is very important. It's not just about opening a trade or closing a trade. The more important part is managing the trade, right? So, Nick, I'm getting a lot of emails and questions here from the viewers. There's a couple of them we're going to go through really quick. Then we're going to get back here into the session because it's pretty intense here today, folks. But again, thanks a lot for these questions. So let's see, Joe, are the sessions on Sundays recorded? Yes, they're recorded. Nick does post them in the chat room as well. And they're also on that list, that Excel spreadsheet. Does everybody that joined get a free laptop? Yes, we are doing a giveaway. It's free. You don't have to do anything for it. You guys pretty much will get it as a courtesy gift, right? What is the chat room schedule? The schedule is Monday to Friday, 8:30 a.m. till about 5 p.m. ish. And then Sundays, you are there from 10:30, 10 a.m., 10:30, up till about 1 p.m. Eastern with Nick. Again, going over hundreds of tickers. Maria, it's a new Google Chromebook. Let's see. Next question: is there a money back guarantee? Yes, it's 30 days. No, we were not joking. Somebody here thinks it. No, it's definitely for real, right? So 30 days for you to try it. No fine print. Basically, for any reason, if you don't like it, you get your money. It's that simple. Let's see the price next year. The price next year would be the same as today, 70% off, unless any of you guys decide to go there for the lifetime. You can reach out. Let's see. And Jeremy, do you teach the strategies to trade from A to Z for a total beginner? Yes, Nick Shaheen does that. Next trade, how much capital is required to do trades in the chat room? Very important there, Nick.
0. If you're new and you jump into the chat room and you start taking trade live, you're making a big fat mistake. How much is required to get started? I forbid you from using real money if you're getting to learn it. 0 is the starting dollar amount. You should paper trade with fake money until you learn the method, until you learn the concept, until you prove to yourself that you can actually do it. And then you jump in with 1 contract, which is minimal dollars needed. And then with 2 contracts, and then with 3, and then you say, okay, I'm ready to risk 10,000. I'm ready to risk 50,000. I'm ready to risk 5,000. I promise you, I know a person in my program that started with $1,300, $1,550, and she turned it into, she added about 9,000 to it in a month. Now, caveat, she's studying the hell out of everything, and she's actively trading even after hours. So she's making big bets, relatively big bets to her small account, and she made it work. And on Thursday, I know for a fact because I was going back and forth sideline with her, she went from being way up to way down, and then she managed that way down position into Friday, and she ended up being decent up. So she went from, whoa, I did so well at the open because she was lined up bearish. And then she went away because she has kids. By the time she came back, she was super red. And then we had a discussion and I shared my path in the charts. She lined it up by the time the next morning, mid-morning, she had recovered all the way down. She didn't recover the all the way top, but she was 40% of the all the way top, which I thought was an incredible achievement. Now, it took a lot of guts to do what she did, but she's actively trading, and those were her results. I never said get long and get short. She took the trade, and then she told me the levels. I shared my price path, and she acted on her own. So it is doable. Those are unusual results, but it is doable.
Right. And it's also important that a lot of people, Nick, that are trading options, for the most part, they're just buying calls and puts. And I know that you love doing daily iron condors, credit put spreads. That's your bread and butter. And ultimately, that's a more conservative way to trade, right? There are, I guess, relatively safer ways to trade options.
So, yeah, absolutely. The idea of, folks, if you're new to options, here's the easy way to do it. Let's go to Apple. Okay?
Really quick here, before we do get into that, I have to give a big shout out here to Ahmad Falan. Welcome here to the family, newest member here. Let's go.
Hello. Okay, welcome. So here's Apple. Let's go to a weekly chart. Okay, somebody says, do you use fundamentals? I absolutely use fundamentals, but I wouldn't take one trade without 1000% technicals telling me what to do. If you tell me which one, if you tell me I can only use fundamentals or technicals, I would say you can take your fundamentals. And I'm a fundamental trader. But if you force me to use either or, I would choose the technicals because they are more important these days. The fundamentals are super important, but I kind of know the companies. And for the next 10 years, I know that Apple is supposed to be successful unless somebody invents a thing that bypasses a phone. And then Apple is toast. If we don't need phones anymore, what does Apple do? Everything revolves around the iPhone. So they better be the ones that present that opportunity. So anyway, so fundamentals are super important. And if you were with me in the room, you will see me do this like 10 times a day, at least. Okay, how much cash do they generate? What's their income statement? Are their sales growing? Is it annual, quarterly? What's their valuation right now? Price to sales is 6. That's pretty cheap relative to Apple, but that's 3 times more expensive than Amazon. PE is pretty high to Apple, but it's less than before. So value is not an issue for Apple. What's the issue? Just fear in general. So I do that at least 3, 4, 5, 6 times a day. I use fundamentals, of course, but how do I trade, when I trade, and by how much I trade is 1000% generated from the technicals because they are foolproof. If you don't believe it, I know I can change your mind, because when I draw lines and the price action happens along those lines, like to the freaking penny, you would say, okay, I'm a believer now. Let me see if I can prove it to you from last week. 5 minutes, reset, and then I'll go back to making my point if I don't forget it. Okay. So let me see here. Somewhere here, I drew this red path. When we were up here, I drew this red path. Okay. Right here, before the market opened, I drew this red path. They poked that before the market opened, and then look how they did the market. So this red path was drawn before the market opened, and that's exactly what price did. How the hell do I know that? I don't know that. All I know is I'm following the technicals, and I'm drawing the scallops. These are called scallops that happen in this environment, and that's how they did. This white resistance line was drawn weeks ago. I promise you it was drawn weeks ago. Look at where they died Friday morning. This line was from July. Look at where they died. This resistance from last month, look at where they died. I think this is a June level as well. So every line matters. This, hold on. That's the best one. Check this out. Before the week started, I had this on 10/11, at least, October 11th. I had this note before the market opened. I said, price path from September 15th, beware of this possibility. Why did I get to that? I have other things I look at, and that prompt me to look at 9/15. Demand on stocks was similar in 9/15. So I went and I copied the 9:15 price action. This was one day on 9:15, and I brought it here on this week on the 11th, I think, whenever I said it was, and I put it there. I said, beware of this price path. Look at what happened. And this is my target. This is my target from the last two crashes. This is an exact copy of the pattern and the last two crashes. Look at where it points, 34, 50, 60, plus or minus $20. Is this a coincidence? Am I this lucky? No, it's not a coincidence. These are self-fulfilling prophecies because the bulk of the trading is happening by machines. I'm not from Wall Street, I promise you. I'm an engineer with an MBA in finance. I figured this stuff out on my own. And Wall Street would have you believe that it's, no, forget it. They don't know anything. They're just as blind as we are right now. They have no control over anything right now. So this orange line and this yellow line were my pivots this week. This represents the June low, which we lost. We need to recover. Otherwise, we're going much, 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 much lower. Did you hear that part? Okay. Stop adding to your stocks if you're long stocks. This is another line that caused this debacle. So until they recover this line, this will play out. So 34.50 will probably play out by Tuesday or Wednesday if we don't recover this neckline. So I'm not here to scare the hell out of you. I'm here to tell you that go with the flow until you recover the necklines. These are two important zones. So if you get a rally to 3,700 or 3,800 and you're starting to buy calls to chase it all the way high, you might get lucky, but chances are you're opening yourself for heartache. Don't do it. Okay. So what was I saying? I was going down the line as to how I like to trade. So here's what everybody else likes to do. Everybody else would like to say, I think Apple is going to here this year or next year. And they start buying Apple calls or shares or whatever. I would rather say, I think Apple won't be here next year. I think I have a better chance of being right than them being right. And if that's the case, I can make money off of that statement. So that's the style of trading I like. So if Apple falls, I'll give you an example. Which, by the way, AMD and NVIDIA, I was so right on, and I took flack for them. But let's say AMD. I'm showing you AMD. Great fundamental company, extreme pressure because of, first of all, it's not cheap. Second of all, there's mitigating issues in the supply chain to where, we closed down the world for a year. This is the consequence. All right, so the pandemic, where was it? Okay. So this was the pandemic crash. Somewhere here on this, in this candle, the price was falling hard and we had a pandemic. I sold puts to somebody at 22 and then the price bounced and then did this. I sold them again. These were October puts from February and I sold them again for July at 20. So I made thousands of dollars off of that because why? People were panicking. The puts were just exploding in value. And what did I do? What does it mean for me selling a put? Let me put it in words. Let's use the July one. Somebody paid me, if I wanted to buy 1,000 shares of AMD, somebody paid me $2,200 to buy their shares at $20. So I would break even below 18. Imagine that. The worst case scenario for me, even if AMD did this, I wouldn't lose a penny until it starts to fall below $18. 18. And then I did it twice. So somebody panicked and bought these puts from me. That's what I'm looking for. Panic so I can sell them lottery tickets. And here's the panic that happened to me in AMD up here. This is a weekly chart. Look, resistance. Boom, breakout. Testing support, yes. Testing support, yes. Testing support, no. Fail. Right? So the downside of this head and shoulders is still almost not done, somewhere around here. I'll show you my lines. The problem is we have another one starting here that says AMD will be here somewhere, which clearly that's not the case. but it says at least respect it. The zone, the pre-pandemic zone, the pandemic zone, respect it. So, but here's the thing, the pre-pandemic high, when we came into COVID, we had exploded. I don't know if you remember it. I was flabbergasted. What the hell is happening? You just told us China closed because of a virus. They canceled their New Year's festivities because of a virus, and the world spikes into a new high violently. It's like somebody knew was coming or something. Anyway, so that was a bizarre scenario. So AMD at or below 40 is entirely possible in the next 2 months. That is not a scenario it does on its own. That's the scenario where the SPX is in the low 3,000 or high twos. And you want more scary stuff? What is the neckline? 100. So they went to 108 and 104. That doesn't matter. They're trying to recover the zone. They didn't. Watch this. Watch this. Here's the magic. Watch this. Look. Whoops. I'm going to switch it to NVIDIA. NVIDIA had the same scenario over the $200 mark. And I'll show you my lines. I'll show you my lines that I had drawn for weeks and weeks and weeks and weeks. Control hide there. So this was my target for NVIDIA from up here. This line, I guarantee you it's been there for that long. This was my target. We hit my target. The actual official target of this head and shoulder is somewhere here. So if you wake up and NVIDIA is below 90, 88, 92, don't be shocked. This was the target for weeks and weeks and weeks. And look at this. This was the high. This was an all-time high before COVID. And it was a ridiculously high. The stock had just rallied. God, TradingView. Come on. Had just rallied 20% to break into an all-time high. This one was extremely high already. And then now we're almost at a place. So I'm going to show you the lines for AMD. I'm not picking on those two. This was my line. It's still not there. This is a new line, which I don't think will happen. That's another head-in, but I don't think this will happen. What I know is the sellers are in charge. Sell the rallies. That's what I know. I know that I'm approaching my target from up here. So I don't want to short it because it's still going down. But I don't want to be shocked and it's like, how did this happen? Did this BS? No, it's not BS. This is typical charts these days, and they're not alone. I like the fundamentals of NVIDIA. I like the fundamentals of AMD. I just looked at it. NVIDIA is twice as expensive as AMD from the price to sales and the PE, which is nothing I would look for these successful companies. Intel would be the cheapest of all three, but it's a manufacturer, so it has extra pressure. Intel's PE is like 5. What? Intel is bigger than AMD and NVIDIA put together twice over, by the way. Okay, what is a neckline? A neckline, good question. So this is a failing point, right? The bulls come here, the bears say nope. The bulls come here, the bears say nope. The bulls get back here, and they say yes. And they come back, look, surgically to the place from which they broke out. And they say, yep, that's floor, footing, look. So that becomes a neckline. I call it neckline. It's a battle zone. Look, resistance, breakout. So it's support now, support, and now it became resistance. So the next time you come into that zone of 100, remember that that is a neckline, a battle zone for months and months and months. When we get here, we should fail the first time. When we come to it again and we beat it, what happens? Whoop. That is an inverse head and shoulders, the opposite of this guy. The target would be then that. So this is, see what we just did here, folks? What Tom just jumped in, had a question that had nothing to do with what I was saying, but it was a side question based on words I used. Tom was honest enough to say, what's a neckline? Look, you just got a lesson on what a neckline is. It's a battle zone that has been significant as support and resistance. And next time we will watch for what happens around it. And if the bulls take it back out, they come back and test it for footing here or here, it doesn't matter. And boom, that becomes the target. As deep as this, wherever this be. Like if we fall more, we would make a new high. And so that's how it goes. So fundamentals, you heard me talk about fundamentals, did I not? I did. I mentioned PE, price to sales, things with the supply chain. That's all fundamentals. I know them by heart for this company, for example. So I don't need to go check the fundamentals. I can just say them. And then I came to my timing based on the charts. I wouldn't take any risk on AMD and NVIDIA right now, because my answer is, if AMD and NVIDIA are rallying, the market is rallying. So why would I want to take on extra risk from the semiconductor sector? They will rally faster because they have been beaten down, but you're taking more risk that you don't need to. The SPY will be just fine as a tool to, as a vehicle to get me profits. So this conversation goes on in the chat room all the time, every day, all day. This is what we're doing. So to prove it to you, what if you were long AMD or NVIDIA? Okay, there we go. That's discussion. I was going to ask for a ticker, but that's even better. So Maria's asking, what if you're already long? So I'll ask you back. At what point did you enter, if you have one? Somewhere around 80 or somewhere around 130? 1 year ago. So yikes, you entered at the highest time, basically. So yeah, okay. So if you were in my room, you would have been not entering, because I've been saying, don't do it, don't do it, don't do it, don't do it, in hindsight. So the follow-up call, thank you for sharing, Maria. It takes guts and I appreciate it. The follow-up question from me to you would be, did you take a full-size position? Or did you say to yourself, I'm not going to go? No. So you said to yourself, I'm going to take this in 2 pieces. If you did that, congratulations. Excellent. So what do you do now? You choose an entry point. When you see some stabilization, closer to 50, closer to 45, if we go into the 40s, I would enter another batch for AMD, because I believe in the company long term. So I'm going to assume you enter the 150. Don't answer, you don't need to. If I took 10 shares at 150, and then I can take 10 shares at 50, right? So now I have 20 shares. You add up the 2 prices and you divide them by 2, so you would have entered here somewhere, right? So if your position was one of many, like if you took 10 shares and you really wanted 1,000 shares, then you can enter 200 shares here and bring your average price down to here somewhere. And then once you have clear stabilization in the environment, you say, okay, now AMD can rally on its own, but without being hampered by incredibly falling markets. Then you can add 2 or 3 times, and then you would be long AMD somewhere around 90 to 100. That's not too bad. Is it too late to sell Intel? I would not sell Intel here. I would accumulate shares. Can I use derivatives to improve my position? You mean options? I don't think so. And so here's another lesson there. Maria has shared the scenario of being long AMD at 150. I made up that number. And Maria wants to know if I own shares, can I put them to work? I could, but it's so far. There's no premium. I waited too long. If I bought shares right away, I bought BABA calls right away, immediately sold calls against them. So I can do that. But with this, I can't do that. There's not enough. I can buy puts, but that adds more risk. The puts will stop the bleeding, but it's too late to do that now. Not too late. It's suboptimal. I saw you ask about Netflix and Tesla. I'll tell you that in a second. Will you touch again on why you think there may be a dead cat bounce in the market coming? I didn't call it that, Nico. It is not a conclusion and timing. I will see what happens tonight. Just from trading the ranges, so the S&P 5-minute chart, this is an unbelievable floor for now. This is a violent reaction, just like this is a violent reaction. So to me, there's a box right here. There's a box right here for the next 2 days, for the next day at least. Breaching this is going to be very difficult. So if we open down on Sunday night, I would be tempted to get long here with a stop. The long thesis would be against this. If this fails, I'm wrong, I'm out, because that's what's going to happen next. So if I get long here and we get back to here, I'm out. That was my exit position. So I get long from here to here. If we open gap up, I would book my profits if I took longs. If we breach this, we might have some legs. If we get here, I'll buy puts for the day trade, and I'll exit the puts here somewhere. So you see how I plan my day? My thesis that we might get a bounce, I said if we get a bounce, I would fade it. Otherwise, my thesis is we're going to finish that yellow line to the middle of the 3400s. So you misheard. My concept is if we get a bounce, I would use it to fix trades that I have, book profits faster than normal if I have any, and expect a turn. And because if we don't recover those orange line and the yellow line, which are the June lows and a little bit above it, just put it in your head. If we don't recover the June lows and then some, just use it that way. The June lows and then some, then we might revert lower, breach that low we did on Friday, and it will be a violent move down to the middle of the 3400s in the SPX. That's my thesis. Now, the overall thesis, now keep that in mind. I think we're going to have a rally at some point. It's going to be big. You have people chasing, just like a few days ago. We had a big rally and it was pretty incredible and people started chasing. And then it's going to come back down and have a crash. And the crash will bring out the fear in the politicians and say, this thing is running away from us. I know we designed it to be like this, because this is all on purpose. It's so stupid. It's all on purpose. They're going to say, uh-oh, what have we created? Powell, enough already. Change your rhetoric. Powell will come out and say something like, we have done enough and we are start to think about thinking. You know, remember how he said, I'm not thinking about raising rates last year? He's going to have to say something, well, I may be thinking about stopping raising rates this year. And if he drops that hint, boom, sustainable rally. If he says, I'm starting a QE, new highs in 2 months, new all-time highs. So a lot of things in fluid motion. I have nothing concrete. I trade it one line at a time. I have my thesis. I have my beliefs. And so far, they've been spot on. And I adjust the price action based on what happens in the charts. Combined option strategies are plentiful. I'll enjoy one. So I told you, I mentioned somebody came in and said, I want to be long BABA because of blah, blah, blah. I forgot what they said about it that day. It may have been that day right there. Yes, that day where BABA opened down catastrophe and had this big rally. So I think we caught that. So a strategy that's a combination. Owning shares, you own an asset. And with options, the options give you the opportunity to put that asset to work. So you've heard covered calls. So if I own 100 shares of Alibaba or any stock, I can sell covered calls against them, which basically I'm saying to somebody out there, how about you wait? Please answer my question. There's like 1,000 other questions. I'm educating first. You can wait a little bit, especially that you want me to trade for you on earnings, which is a complete coin flip. All right. So if I own an asset and I want to put it to work, I can sell covered calls. So basically, I'm offering somebody my shares if they want them from me. And for that offer, they give me money right now. So I can only do this if I'm willing to sell my shares, because there is a potential of them actually calling me out of my shares. So when I buy a call, I can do the same thing. So right down here, I bought calls in BABA. So I didn't buy shares, but I bought calls in BABA. And the calls were for 10/21. They would expire this Friday. And then BABA did this. And we had 2 weeks until then. So what I did is I sold calls in BABA for that week. So I sold calls in BABA up here. So I own calls, I sold calls, and it was a diagonal. Those calls gave me $50 once per contract. And then I did the same thing for the following week, and I got another $100 per contract another week because those expired in my favor. They died. Whoever bought them from me, they didn't do anything with them. I collected $50 per contract, and those are mine. I repeated for the week thereafter. Somebody did that. Also, it died in my favor. And then during that week, I sold these as well for a profit. So that's how you can put an asset to work. That's called a diagonal. That's called a diagonal. How do I use volume profile in a little bit? Okay, so somebody's desperate for my call on earnings. I covered the Netflix earnings this morning in length, and I recommended it to my members what I think will happen. So in order to protect their values, I'm not going to tell you what the trade is, but I can tell you that in general, any earnings trades is what? It's a coin flip. You're gambling. If you think which way the stock is going to go, you're guessing. You're saying, oh, they're going to blow out the numbers. Yeah, it doesn't matter. Now I'll give you proof, mathematical proof that it is a coin flip. Up until last time, Apple had one positive reaction to 6 or 7 reports. Apple hasn't delivered a bad report in years, decades. So how is it not every report up, right? It's not. It's almost every report down except a few up here and there. So if it's about quality of the earnings, Apple would be up all the time. Google will be up all the time. Facebook will be up all the time. Amazon will be up all the time. Microsoft will be up all the time. And they're not. They're not even a coin flip. They're like 60-40, 70-30. So consider yourself not using the fundamentals. Oh, the report is going to be great. That's I'm about to buy calls. No. And how to trade earnings reports? You should play with implied volatility. I can put you on the path, and you can make your own decisions there. Now, implied volatility, who reports this week? Tesla reports this week, right? So Tesla and Netflix report this week. I know one thing, Tesla will sell out of every car it has. So the report doesn't matter. And so Tesla reports this week. This column here is implied volatility. This is like the VIX for Tesla. This is how expensive these options are to this week. And I bet you anything, when the market opens and we get closer to Tesla reporting, that number is going to be much higher than 90. So let's go out in time. It's already 70 out in time. So it's already 25% more than it should be. What does that mean? If I buy a call here, or if I buy a put here, I'm paying the going rate. 60, 70% implied volatility. If I buy a call for this week, I'm paying already 25% more than I should be, which tells you you should never buy options for the week of expiration for earnings. You should never buy them because you're paying so much more. If this number turns into 150 before the earnings report, and it could, that means you're paying more than double of what you should be paying. So the minute the bell rings the next day after it reports, the minute the bell rings, everything you bought, calls, puts, whatever it is, they get a 30 to 50% haircut at the bell, just from the bell ringing. Forget the direction. If the stock moves up or down, fine, you may make or lose money from that, but you will lose 30 to 50% just from the bell ringing. Goes whoosh, that number just collapses. So don't buy options for that week. If you want to make a bet, use outside weeks. They're more expensive each, but they're less expensive per the going rate. Like this is $1,270 versus the usual $1,100 maybe. This one is $1,000, $900, but that should be like $650. It's not, just because of the earnings. So when the bell rings, it goes back to 600 right away. And then the price action will determine whether it goes up or down. So you have the implied volatility, they call it crush. So this number here, the how nervous markets are for the calls and puts for that day, shrinks. It's too inflated right now, and it will get more inflated. So how I would trade this is I would buy things out here and sell things against them here. So if I wanted to be long Tesla at 205 or 210, I would buy the 210 November, 33 days out. That's not a trade recommendation. I'll tell you the description of a style of a trade. I pay $1,650 for that one, and then I can sell this one at $216 for $500. And if I wait a little bit, that will be probably $700 by Monday or Tuesday before the earnings. So I would have a calendar, a diagonal. It's a spread between buying something out in time and selling something now. Don't do this if you've never done anything like this before. Those are tricky. A straddle to nullify the volatility crash. A straddle doesn't nullify the volatility crash, Tom. A straddle is the worst kind of volatility exposure. You're buying something super expensive and you're selling something super expensive. You need a massive move. So are you selling a straddle? That would make sense, but don't do that because you cannot sell naked calls. So a straddle is buying a put and buying a call at the same time. So you're basically not betting any which way. The only way you make money in the straddle. Okay, now we're lessons. So this is current price on Friday. A straddle is buying a put and buying a call at the same time. So this is bearish, this is bullish. You don't care which way the stock goes as long as it goes a lot. So if it does this, you make money. If it does that, you make money, but a lot. By how much? You need a $20 move. So you need Tesla at 180 or lower. You need Tesla above than 223 to make money. So you're buying expensive and buying expensive. You're doubly buying expensive. I wouldn't do that. Market makers sell these. They sell the straddles. So I don't like them, but if you did them in Netflix before it collapsed, you made money, a lot of money, but those are rare. I would do it in Netflix because I think Netflix's earnings are going to be either disastrous and going to be under 140 or it's going to cover the gap. Depends on what Reed Hastings says. If they tell us they're no longer growing and they don't have a solution to it, that stock, don't buy the dip.
Hey, Nick. Michael has an interesting question here. How would I be able to take advantage of the trade ideas if I have a full-time job?
Okay, so not every trade idea is tradable for someone that has a full-time job. The trades I like to place are weeks in advance, and those are the kinds that you do take advantage of. And even then, not everyone is. That's why I say I'm not a trade alert. I offer education and I offer trades that I would take. I don't take all the trades I offer because I would have a portfolio with 6,000 trades in it because I have so many services with Benzinga, so many people reading my newsletters. So you would go in here into the chat room, wherever my chat room is, and read my messages. And every day, almost every day, I post a trade idea that does not need active management. So last week, you needed to actively manage the trades because they went under fire because the market corrected. So like I said, Amazon trade was fine, green, 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 red, red, red. Oh, then green, green, green. And then the last day I sent out a note saying, it's green now, close it or roll it. Don't hope. Boom. If somebody didn't close it, they took maximum loss. So the maximum loss was, it's a spread. So the maximum loss was finite and you took that maximum loss. So I'm going to remind you that, what does that mean with maximum loss? All right, so let's go back and define risk. Please do this from now on for the rest of your life. Anytime you want to take a trade, define your risk. And your risk is two pieces. One is how much money can I lose, right? And that you do not manage that risk. That is set and you move on. The part you manage is what are my odds of winning and losing? That's the part you manage. So with options, that's easy because the number is right off the page. I don't have to guess. Like if you buy shares of Apple or if you buy calls in Apple right here at the money, you're saying to yourself, I have a 50% chance of being right because the seller has just as much advantage as you do. You do homework and you know something that they don't, maybe. They do homework, they think they know something that you don't. He thinks you're wrong, you think he's wrong. Therein lies the competition, but it's 50-50. Now with options, a little better. You can set your odds of success by buying a call, and the odds of success are set by the delta or represented by the delta. So let's go there. So once you set a trade, you track that delta price. For example, if you buy a call in Tesla for next December, and you say, I want to buy a $250 call or $240 call, 36. That delta right there says that there's a 30% chance of success. Actually, let me use Apple. It's easier. It's got a smaller span, so we can go from extreme to another in one page. Okay, so let's clear that and go back to this. Apple is right here right now. This has 61 days on the clock. What is this? Just options. Don't worry about what they do. These are calls. Everything here is calls. Everything here are puts. What are options? They're contracts. Every option here is a contract. Just like any other contract, they have terms and conditions. You enter into a contract with the insurance company. They tell you this coverage is for 6 months. That's how much you pay a month. And here's the coverage. And here's the car. In this case, the car is Apple. Everything here is about Apple. Everything here has 61 days on the clock. Why? Because I just clicked on December. I could have chosen one that expires this Friday, next Friday, the Friday after that, November middle, next year out to 2025 if I wanted to. I chose December. Current price of Apple, 138 at the close of Friday. So how do I use the implied volatility? This is what we're talking about. No, sorry, the delta. This is what we're talking about. The delta is my odds maker. There's one for the puts and one for the calls. What are puts and calls? You don't really need to know right now, except to say, to talk about the delta. Calls are, when I buy a call, I'm buying the right to do something. When I buy a put, I'm buying the right to do something. Okay. The buyer is always in control. They're controlling everything. They have the right to do something, not the obligation, just the right. So when I buy a call, I'm saying, hey, I like Apple. I want shares, not right now, but hold my spot for 100 shares. One contract is 100 shares for everything here. So now we have terms, right? One is Apple, one is the contract 100 shares, one time 61 days, and then price levels. So buying a call is me reserving the right. Buying to a put is me reserving the right to sell shares. These to buy shares, these are to sell shares. That's the easy explanation. A put, if I buy it, I'm reserving the right to sell shares. I don't need shares to buy a call or a put, but let's not complicate things. And if I buy calls, that means I'm reserving the right to buy shares. All right. So let's say my brother comes to me and says, he's a surgeon. He doesn't know anything about the stock market. He says, I think Apple is going to 170. I'll say, by when? He'll say, I don't know, December. I'll say, okay, let's see what the market makers say about that. So he mentioned 170. I'll go here and I'll look at the delta. Remember the delta? It's 0.09. It's not even 10%. 0.09. It's from 1 to 0. So this literally says this is a low number, right? 0.09. There's very little chance, that's a little number, that Apple will be at 170 in 61 days. That's what that thing says. Very little chance. Apple would be at 170 in 61 days. So in theory, I would say, you want to buy this call, I'll sell it to you. That's in theory. Don't ever sell a naked call, but that's in theory. Let's say somebody thinks Apple is going to crash. It's going to go down to 95 in 61 days. I'll say, okay, that's the delta. There is very little chance Apple will be below 100 in 61 days. Very little chance. Not impossible, but very little chance. So these are things that happen that you can just read off the page. So back to the definition of risk. One is how much money I can lose. Number two is what's the percentage, and that's the part I manage. Let's say he buys a call here. He says, okay, you're right, 170 is too low, too high. I'm going to buy it here. And he buys this call that has a 33% chance or 35% chance. It's a round number. So it has in the 30s. So realistic odds of success. And then Apple falls a little bit. Then suddenly this number turns into 15. And you say, you know what? When I started, I had 30% chance of success. Now it's more like 15 or 10. I'm out. So you use this delta number to manage your odds of success. That's how I manage that. All right. So what are we doing from here? Do you want to take some tickers or what?
Right. No, just some of the interesting comments here that current member that trading with Nick basically changed the way that he looked at the markets, that he used to trade alone. before that. And I'd say that's probably the number one thing, Nick, that we want people to kind of get at. If you're doing this alone, you don't have to go through that, right? You don't have to go through because many times when you're a new trader, you learn by blowing up your account, and that's not the right way.
The fact that I have somebody in this room here today when they don't need to be here, okay? The fact that they spend all day with me, 9 hours a day, me talking into the stupid mic, and the fact that they join me on Sundays, it says the quality of the feedback they're getting. Again, I'm going to say it. I said it earlier. I guarantee you will become a better trader being in the room with me. Just, Paul, just know that you're in the presence of 300 other traders that are better than you, less good. It's a whole gamut. Brand new startups, futures traders only, currency traders only, blend of options, stocks, and futures. Everybody is welcome, and the collective intelligence in there is amazing. I have a set of traders that are in, out, in, out, in, out, in, out, and they post all their trades. So you can see, okay, this guy does well most of the times, maybe I can try to copy him. And then you have another set of traders that are in swing trades opportunity and out slowly, and they have an unbelievable hit rate with success to the point where I jump in when they post. So when Ryan comes in and says, I'm buying a put on FedEx, I don't even need to bother what FedEx is doing.
Right.
I checked the chart for a minute. And I was like, you know what? He's got something. Let me jump in. James jumped in and said, I'm looking at Baba. It's juicy. I jumped in. I made money. So that's the goal.
We can't talk about the chat room without talking about the great community, the great members that we have there.
You're in there, you know it. You're
I was there last week. I
was thinking about you with your TSS calls. I was like, I hope he booked it, because boy, it went from super great to super bad.
No, yeah, I did. I booked it. I think it was on Tuesday or Wednesday, but I was there. Just kind of going through, hey, Nick, what do you think about the SQQQ? And look, it's not people know that here and there I'll jump in when I'm on a trade and when there's volatility in the markets. But really, you make a big trade like that, just the value of having that, it's peanuts compared to really not just what you're doing in the chat room with the trades, but what you're learning.
The money that we are charging, that you are charging, I wouldn't charge this money. If this was my own service, this is gross underprice management. But luckily, Benzinga has a wide enough reach to where they can make the numbers make sense. Where we have so many people signed up that we get the benefit collectively for us, and you get the benefit of a lower price. And so don't let the price stay. First of all, if you think it's too much, go out and shop for a classroom that's open all day for a whole year.
That's why we still have it open.
Yeah, it's at least 10 grand anywhere you go, at least 10 to 20,000. You cannot get an all-day class teaching you how to trade, technicals, fundamentals, answering every question you want, 2 write-ups a day, trade every day almost for people who are not in the live room, videos twice on Sunday. I do your homework, 2 to 2.5 hours of homework delivered. That means 6 hours of homework for me working on a Saturday for you, so you don't have to do your homework. So the value is there. I have clear conscience on that. Okay.
Yeah, and
some people will win, some people will lose, but that's where we will try to migrate people from winning more often than losing. The key is not to get bogged down with maximum losses and try to avert the maximum losses. And how to imagine if you had a trade go bad and you can jump into a room and say, holy crap, I got myself into this trade. How do I get out? 300 people will try to help you out.
Nick, and also I want to mention
how much
here,
is that?
Everybody that joins, okay, while we're live here, okay, I went ahead and made a couple adjustments. You're going to get additional bonus trade alerts and strategies from Nick Shaheen, separate from the chat room, folks. This is me hooking you guys up because we do have a special day here with Nick going on.
Okay, so somebody's asking feverishly, like having a conniption here. They want to know volume profile. Jose, volume profile are these candles right here. It's a long conversation. The fact is, it just says, these are volume bars down here. Everybody knows what these are. They say when something happened on the 13th, on the 14th, on the 17th. Okay, so these volume bars are the same conversation, except at what level. So I know that there's interest at this level, there's interest at this level from here to here, there's a gap here. So if we lose this level, we go whoop, straight down to here. That's the short conversation. And if we get above here, there's not a lot of volume there. Maybe not. I have to zoom out.
Nick, and you can see, and folks, all you guys can see as well, really, like, everybody loves to ask Nick for their opinion on trades. What is this? What is that? Am I doing this trade the right way? Folks, you have this all day, every day, Monday to Friday and Sundays. Like, there's really nobody else out there that gives you the amount of time. And that's what it is. Attention, dedication, commitment to you guys, commitment to the users, right? It's more than just, a chat room. It's really more where you create experiences. You trade with other people. You get to know other traders. We even do get-togethers. We did one in Vegas this year with the chat members, hanged out with Nick. So yeah, it's a lot more than a chat room, I'd say. It's a great community.
Here we go. Russ is asking, suggest portfolio percent per play. That's difficult to say. All I have to tell you, Russ, is that you never want to be stretched. You always want dry powder, especially when we're teetering on crashes or super rallies. If I'm actively trading intraday, I can, stretch the limits this way or that way. Like I used an example of one person making so many good results. She actually used a big percent of the portfolio on one trade on each of the trade. But now her portfolio is big enough to where she doesn't have to do that. So she knew she was taking excessive risk, but it was, let me get out of the hole into a good size account. So now if the account is over 15,000, then now she can take a smaller percentage trade, which was the same size trade that got her there. So somebody's asking about the Benzinga Pro.
That's no worries. I just sent over the message there to Scott. But ultimately, Nick, we don't want people to trade alone, and we do these things. We help our traders.
Okay, I'm going to give you a few do's or don'ts, whether you join me or not, and I hope you join me because I promise you, you will see the value, and it's unbelievable the amount of. I usually get clips. That's the second time in a row, Rodrigo, I don't bring clips because they were insanely positive statements that will just make your heart go pitter patter. So here's the thing. First of all, NTNT. Remember this acronym. It's a silly acronym, bad handwriting. NTNT. No trigger, no trade. No thesis, no trade. So what it says, if you don't have a reason, why are you taking this trade? If you don't have a reason, don't take the trade. And the why cannot be because I think it's going to go up. No. Why do you think it's going to go up? Will you take your mother's money and put it in there? My mother is 90. She is broke right now because she lives in Lebanon. She has money, but she can't get it. The banks are broke. Therefore, she is broke. Can I take the money she has and put it there? Would I do that? I wouldn't. If I don't have the guts to do it for my mother's money, then maybe my money doesn't deserve to go there either. Have purpose for every trade. That's number one. When you get in, never take a trade without exit strategy. Exit good and exit bad. If I make 15%, I'm out. If I lose X percent, I'm out. If I lose a level, I'm out. Have an exit strategy if things go well or things go bad. I don't know one trader, professional, successful trader that doesn't have this and it doesn't have that. And they all have part of the management is they have trade sheets. So before the day starts, they already have a trade sheet. Guess what? I give you my trade sheet every day with pictures, every day with pictures on all the indices and the futures and comments on the events and the earnings report. By the way, we have an earnings report coming. Season starts now. There's a whole bunch. IBM, Tesla, Netflix, Bank of America before the market opens, Snapchat, a whole mess reporting. American Express on Friday. Okay. So those are two things you must do. One, have a reason to get into the trade. Two, have an exit strategy. What gets you out of the trade? Okay. Also, you need to be able to manage the percent success every day, every week, however active you are. Okay, the trade when I took it, it had X percent success ratio or estimate. Is it still acceptable? No, out. If it's not out, I'll give you an example. For those of you who know how to trade options, okay, let's say I took a trade of this stock going to here, and I bought 10 calls up here, and the investment was $1,000. I'm making stuff up. Now the trade has gone bad. I still have 10 calls and I only have $300 left in that trade. So I lost $700. Let's say I didn't stop myself out and it's too late to stop myself out, which is never the case. How do I handle that? Well, my thing is the odds of success cannot be acceptable at this level. There's no way you're going to tell me that the odds of success are still acceptable. So what do? Take that 300 off, book the loss, and use it down here. So you can't do 10 contracts. You'll do 1 or 2 contracts for $300. So I didn't increase the risk. I just moved it from here to here to have better odds of success. Rather, a small rally gets me back money. And I redefine the trade. The trade is no longer the point, is no longer to make money. I'll tell you what that is. I'll give you my personal trade setup. Okay, so I was in a trade that went bad on Friday. It was Amazon. And I needed Amazon to close at 108 to win. And I still had 5 contracts, so 108, 107. And within hours of the close, everything looked great. It was awesome. It bounced, and then hours to go, we were here, and then that's what happened. So the trade had risk here and the risk out here. So this was maximum loss. They took maximum loss at the close. So what did I do? I moved the trade over 1 week, and I got paid for it. So when I moved it 1 week, if I had 5, okay, so you know what? I don't remember how many I had. Let's say 5. And I moved them over to here. The order showed me a credit. So I would have collected more money to move the trade. So I'm getting paid to do the right thing. I was like, you know what? This is a bad trade at this point. I don't want that. So I didn't reopen 5. I reopened 3. Why would I do that? Because it didn't cost me anything. The move was neutral. There was no payment. It was small credit, negligible. So what happens now? Now I still have the same trade that would have gone to maximum loss, and I avoided that. I'm still in a loss, but my problem is smaller. My problem is significantly smaller. So that's how I manage my risk. Incident, I moved it out in time. And size, I reduced my exposure. Because why? I redefined the trade as hostile. It is no longer, the goal is no longer to make money, get me out with the least amount of damage. So it's a hostile trade. So I didn't try to milk it and move 5 to 5. I moved 5, I made it 3. It didn't cost me anything. I gave myself another week, and I made my problem smaller because I redefined the trade as hostile, and it cost me 0 money out of pocket.
Right. And Nico has, what if you can only give attention to this in the evening? Do prior days and week remain? So
that's fine. That means, Nico, you go into the chat room, you read the comments every day, once before the day starts and once in the evening, and you see if there were trade setups shared. If there is, then you study the trade setup. I usually have a full write-up with it, and you go back and say, okay, this trade is not for me, or yep, I'll get into on this trade and see what happens. So there are trades for slower time frames. That's the goal. When I started with Benzinga in 2011, I believe 2011, that's the goal of my setup. It was credit spreads, doing trade setups for somebody that doesn't trade every day all day. And I was sharing those snoozer trades. And then we started evolving the chat room from a regular chat room into a live room. And I finally came out with the live room. And my commitment is with you 9 hours a day. If you don't believe me, you can come join. It's 9, actually more. I have the reports from the software where I host it. They kick me out every 6 hours. I have to relog in because they didn't foresee somebody spending 9 hours. But that's what it is.
Right. T. Barnum.
Tom, I take Bitcoin if you want to pay me in Bitcoin directly.
I'm talking with Tom right now, by the way. Tom is on the in the process here, becoming a lifetime member here. But yeah, look, man, at the end of the day, Nick, this market, I mean, trying to learn how to trade is one thing, right? That just sounds really nice and sweet. But then, trying to learn how to trade in the middle of a recession, geopolitical, situations, and a market crash is like taking a driving test when you're 15, on a car with no brakes, downhill in a mountain, blindfolded, basically at this point. So Do yourself a favor as a trader, do your wallet a favor, do yourself a favor, really, and just trade responsibly. Trade with the community here. We believe that we have the best trading community out there in the world. We put a lot of work and effort to make this that exactly. We manifest it that way. So the members are great. They're amazing. Big shout out, Richard Judge in the house. What's going on? But yeah, there's a lot of members here. It's almost like, it's pretty much like family, right? So, yep.
It is. We watch out for each other. If somebody asks a question and I'm distracted and I don't see it, because I'm helping hundreds of people every day, somebody will jump in and answer. I guarantee it. In fact, I had a few times where I couldn't be in the live room because of engagement, either a doctor's appointment or traveling or something. People would jump in and share their screens. And
Right.
in fact, this week, Doc, I don't know if he's here today, but anyway, he's a member and he had a session after the market closed, and it was like maybe an hour, maybe even 2 hours. I had to get off. I had to tell him to stop because I had another presentation. So the camaraderie and the pursuing the education is unbelievable. Today, in fact, I can bring you the video. I'm not going to. So you've heard of Ichimoku. I knew the spirit of it, but a couple of people in the room are becoming aficionados in it. So I'm forcing myself to become an astute user of it. And guess what? That damn thing is pretty nice. It's worth looking into. Another thing is Elliott wave. I'm not an expert, but I have these drawn automatically so I can train my eyes to see Elliott waves. I don't want to be an expert in Elliott waves. I don't have the time. I know it for a fact, but in Ichimoku, I can specialize in it. Harmonics, that's the red green things you see here. I'm not an expert in them, so I pay for a software that's about $1,000 a lifetime price. I think it's a bargain, and I know how to use it incredibly well, and it makes a lot of money for somebody that does that. So I have tools that I leverage for these guys, and then I share my windows. So at any point in time, we have all the windows open and tracking everything. Price action, trade setups, comments, everything.
Right. I know people that use the Sunday session specifically. Maybe, they're busy throughout the week. They have a long portfolio. Basically, they use the Sunday sessions just to get an update on their group of stocks. They put like maybe 5-10 stocks, and they pretty much get a weekly update on that. So you can really use this regardless of your work schedule, if you're working full-time, part-time, or just learning, because many times now these brokerages, they make you take like a full-on quiz in options and you won't be able to trade. So that's why options is really important, to actually know this.
Yeah. So somebody's asked me if we use butterfly. I think you asked it a couple of times. I use butterflies. Butterflies depends which butterfly you're asking about. There's an iron butterfly and a regular butterfly, and they both can work at the last minute. There's also this iron condor, which is also the same scenario. Pablo, what do I need to tell you? It's at an all-time low. Just buy it, plug your nose, and own it. I own shares. Make sure you don't own too many stocks that look like it. So the butterfly and the iron butterflies are exciting. So the iron butterfly is you know how they say a hole in one in golf? That's pretty rare, right? In real golf, to actually hit off the tee. I don't play golf, but I see it, and it's pretty difficult to hit the ball off the tee and land in the hole. So in putt-putt, it's doable. You go through the windmill, down the hill, a couple of bounces that are lucky, and poof, you get. I know I can do a hole in one in putt-putt if I spend a couple of hours on it. So the iron butterfly is a hole in one for putt-putt, and the way we do it, it's even better than that. So yeah, we use butterflies for last minute options trades, and that's available every day. So basically you risk $50 to make $450. It's low odds, high pay, low odds of success, high pay, and low risk. It's only $50. You don't do them in size and you don't do them every day, but it's fun to do them every once in a while. Now this trade here has an even higher degree of success because it is kind of an iron butterfly only stretch. So I had a pretty wide span of being correct, And if you don't hang on for the full maximum profit, you can make a ton of money quickly. So this trade, I collected $900 to open, $880 to be exact. And at some point, I could have paid $3.60 to get it off the books. So the difference is profit. That was an amazing profit in a matter of, I don't know, 25 minutes. And if somebody heard me say, book it now, book it now, book it now, book it now. Funny story about that. I'm not going to say it. But anyway, woke somebody up that was falling asleep. And they woke up to book it now, book it now, book it now. They made the maximum opportunity, which wasn't the maximum profits. If they didn't do anything, they lost a little money. Okay, so if I think SPX is going 3250-ish, why not buy puts? Because I didn't say I think it's going there. I said we can get there quickly.
Right, Nick, and you do have, well, you know, regardless of what happens in the markets, this is what folks need to understand. The market can bounce or it can fall, but ultimately in the chat room, we're going to be making money no matter what happens.
Yes, so like, for example, here, Karen is asking, why don't I just buy puts? Because the price path has that potential, but 1,000 things can happen between now and then. The VIX is 32, so the puts are super expensive, okay? And if the problem with the puts, the good thing about the puts is the problem about the puts. When so Karen, very good question. Listen to this. If the market is doing whatever it's doing, and then I buy a put, and then the market has a tizzy and it falls out of control. So now the put is profiting and the VIX is exploding. So you've got this explosion in value. You can spend $50 and it turns to 10,000, you know, it's possible. So that works for you on the way down. So let's say that happens and you buy puts and then suddenly the market has a relief rally, whether sustainable or not, the VIX gets crushed, the puts get crushed because the price is moving and the implied volatility is getting crushed. So it's like a double, triple whammy. The money disappears very, very, very quickly. So buying puts and holding on to them is an iffy proposition. I mean, it's doable and you win a lot if you do it, but you got to be good with the entry point. When do I buy puts? When, like, for example, Karen, listen to this. Let's say the market opens tomorrow and we open up and we rally into areas that I think are resistance and you want to buy a put, I'll say, you know what? That is a valid strategy. Put some time on the clock. It's going to be expensive, and put a limit to the pain you're willing to take, and don't go all in. So if you tell me you want to risk $5,000, I would say risk half, give yourself some time, consider doing a put spread instead, or selling a call spread to be short without needing a drop. A combination of a credit call spread and a debit put spread says, I can be bearish without needing a drop. That's a credit call spread. It's called a bear call spread. It doesn't need a drop. You just need it not to rally. And then the debit put spread, already bought puts, will need a drop to win, but now you're hedged. Half your position does not need it and half your position does need it. So it is doable. But to buy puts as the markets are falling blindly, you risk chasing late and then having the market bounce, and suddenly you get stopped out. Even though you made the right call, you had bad timing. So Karen, it sounds like you need to be in our group if you're not already in there. I would love to continue that conversation long term with you.
Yeah, Karen's definitely been coming to the sessions, and you know, Nick, we can do everything here. We can give people a money back guarantee. We can, you know, we have a bunch of developers working on the chat room, giving them all this technology, all this community. But if people just don't want to put time into it, we can't do anything about it, right? But we give you guys all of the resources that if you want it, you can get it here. And I have to give a big shout out, Tom Barnum. Welcome to the family. Newest lifetime member, baby. Let's go.
Wait, that's Tom. We've had we went back and forth with Tom already. So
he's here. Yeah, he's in the room.
I'll
Everybody,
see you in
welcome,
there.
Tom.
So I won't have time to be in the chat room tonight. I have a lot of homework to do. I need to go be with my family for a little bit. I haven't seen them in a while, and a few of them are traveling this week. So I will be in here before the market opens. The video tonight will be important. So I'm in California. The futures open around 3 o'clock my time, 6 o'clock p.m. Eastern time. I'm going to give it an hour or so. I love it, Tom. Welcome. I'm going to give it an hour or so to see what's going on. And I'm going to do a strategy video, which is about 8 minutes usually. And I'll share it in the chat room. And this tomorrow morning, I will share the another update, well, not video. And I will share the levels for the day and the address and the new password for the live room, because I have to turn it over every week. So log into the chat room, which is, where is it? This one. Log into Nick's important messages. No one posts there except me, so they won't scroll off the page like this one. Everybody's contributing, they scroll off the page, and that'll be your start. Welcome aboard. We're going to have some fun, and maybe you will teach me a couple of things. I'm out of energy and out of time. We've been here like 2 hours and 15 minutes, have we not? More. 2 hours and 45 minutes.
2 hours, 45 minutes. No, I don't think so. Maybe.
No.
Who knows? But look, I mean, can you
No,
imagine,
almost 2 hours. Yeah.
for
never
all
mind.
the folks here, right? Like, can you just imagine, right? Being 9 hours, just chopping down the markets, in and out, everything, questions, basically on demand, live trading support as soon as you want it. You can literally take a day off, come back. There's no, literally at any point in time. And also Sundays, right? Sunday sessions are very
Twice
important.
on Sunday. Twice on Sunday.
Twice on Sunday.
No joke.
No,
It
yeah,
sounds-
definitely. I
it
mean,
sounds like a joke, but it's not a joke.
well, okay, just to clear, right? The 70% off is just till midnight. We do need to let everybody know. It's only until midnight. So typically the normal chat room 6K, but we do have the discount for 70% off. And Nick, the education side of it, right? Can you just touch a little bit on that because there's a lot of people here that are just starting out to trade.
This is a report right here. From one day I picked up 1013, 9 hours duration, 1,000 people. That's because 300 and they go in and out. So that's just one day I picked it. I'm just telling you. So if it wasn't worth it, why would it be like that? Right? So don't take my word for it. Just see what other people are coming back for. So this was Friday. No, that was not. So this was 9 hours and 24 minutes. Another day I just picked up, October 12th. 9 and 24 minutes, 900 attendees. So if it wasn't worth it, they wouldn't be coming back. Just go in, and it's free to try. I know it's a lot of money to initiate, but here's the thing. When somebody says you get a free trial, maybe you don't give it a shot. If somebody says, hey, you come in and pay $1, just using a number. If somebody whips out a credit card and commits financially to something, and it's free and it's risk-free and they get their money back, they will be more engaged. I use Symbolic. It's a service out there. I forgot his name. So I signed up. They gave me a free trial for 2 weeks. It cost me nothing. The 2 weeks ran. I didn't log in again. I logged in the first time. They gave me the account. I was like, ooh, that looks good. Let me go check it out next time. Never logged in again. Had I paid $1,700,
and
I would have logged in every minute of every day to make sure I got my money's worth.
So Tom Barnum says that was me. Thanks. Happy to be here. Excited to learn. Tom, we're very excited to have you on board.
So shoot me. Give me questions. Let's go.
Emma. Okay, right. Really quick. Hold up. Emma, what if I'm new to options? Are you teaching foundations?
Okay. So somebody asked this earlier and I don't remember answering it. Emma, thanks for the question. So although I don't have a lesson open officially every day, I have a lesson done at least every day. So for example, I just did one on call calendars, right? So there is education every day. There is static education here for you. And if you need more, I'll produce more. So my focus is education. So you can rest assured, Emma, if you come into the chat room and say, you know what? I don't know what you mean by that. What do you mean? Like, here's another one. Last week, Friday, I believe, I had a chart. And in the chart, I had a drawing like this. And it said sellers. In my head, I know what that means. I've been using that forever. And somebody says, what do you mean? Sellers. So I mean that if we get here, there are sellers lurking, waiting to sell their stuff. So it's resistance. So now I got to word it differently. Maybe sellers lurking. So resistance zone, something like that. That's what it means. So yes, education all the time. I have to make sure that
Yeah.
I'm debating it with you in order to make sure to deliver the proper message. So I'm constantly fine tuning wording in order to eliminate all assumptions on my behalf that you guys know what I'm talking about.
Yeah, those videos, folks, cover everything from what is a spread, risk management, how to manage wins, how to manage losses. Many times, you might have winners, but then you don't manage your losers, or your winners, you don't manage them, and they become losers. So again, risk management and actually managing the trade. That's the most important part.
Yep. So Nico has a question here about scripts. You mean on TradingView scripts? I literally today, just while I was logging in here, I added a new script called Ben Op XY because a member, Ben, gave me the code for it, and it's that stuff. And the goal of that stuff is to show me when the monthly options expirations are, and when the quarterly options expiration are, when it's quadruple witching day. This way, when Wall Street loves to put us in the hole. By the way, this is legit. That's why I put it there. So check this out. Wait. So this is the option constellation for the Friday expiration on the SPY. So everything red are puts, everything green are calls. Look at how many more puts there are to green calls, right? So the whole world is loaded up on puts, right? And especially the ones that are close to here, close to current price. Look how many puts there are. So the market maker, the dealers, not the market maker, the dealers make these puts happen. You want to buy a put, they'll sell you a put, but they immediately take the opposite the position of it because they want to hedge themselves, right? So that's why they say monthly expirations are violent and scary. There's all of these, they're going to go off the books. So when they go off the books, then the dealer no longer needs their bearish positions, because when they sell a put, they need to take a bearish stock. So they sell SPY shares. But once these puts expire, they don't need to sell SPY shares anymore. So you see these relief rallies. So if you look at it, a monthly expiration usually are followed by rallies if we end up falling into them. And I think there was only one that we rose into, which was this one, maybe that one. August. We rallied into the August monthly expiration, but we're falling into all the other ones. And this week, folks, is a monthly expiration. So it is going to be tricky, but we get it. Somebody said, why do you think we're going to bounce? That's one reason. If all this bearish scenario disappears, so the bookmaker, the dealer, no longer needs to short markets. He or she have been shorting markets because they are long markets by selling you those puts. You see what I mean? Yeah. So there is an argument to be said that once those puts get off the scoreboard, they're going to stop shorting markets. So you get these relief rallies. I'm not from Wall Street. I am guessing that that's what happens. So 21, 28 would be the week thereafter. So we still have puts for the week thereafter also. So maybe that theory, we would have to slice it and dice it more. But just so scripts, I don't know if that's what you meant. I don't, I mean, I'm not good enough. I know think script a little bit. I know what is it called? The Thinkorswim script as well. Oh, that was Think script. This is Pine script. So every platform has its own script. If you're good enough, do it. If you're not, just pay for the service and get it done. Like there is no way I can learn how to draw harmonics on the fly. This is a bearish harmonic. That's a bullish harmonic. Those W's and M's. The rules to draw these things are insane. Like these are the rules. There are 7 of them and a cipher. So for, let's see, this one's called a Gartley. So you go here to Gartley. Every leg in this Gartley has strict tolerances. Like the distance between here and here can be between 0.382 and 0.618. It can't be more, while maintaining this 0.886 and maintaining this 1.3 and this whatever. I don't know those rules. There's no way I can draw it on the fly. The solution is you spend a little money, you buy the service that gets you that, and you're good. For me, all of my users see that on my screen, so don't even need to buy it. If they want to buy it, that's great. So we have tools. Some of them are free, some of them are not. Don't be afraid to spend some money on tools. This tool I would pay for, maybe I would pay 10 grand for. It's not 10 grand, but I know over
Right.
the lifetime,
Yeah.
I would pay a lot of money
There's
for
definitely
it.
a lot of great information there in the chat room, Nick. And I see Tom here has an interesting question here. If I would like to do long-term credit put spreads, would you be able to pretty much, give him trades weekly basis?
That was my bread and butter, Tom. When I first got started, there was nobody helping me out. And there were like 3 tickers. There was the SPX, the NDX, and the RUT. And then after that, we started getting 9 stocks, the big ones, and then 20. And then the SPX started getting weeklies. And then now they have dailies every day. So yes, I would be helping you out. My favorite way to trade, Tom, sounds like you and me are in the same bucket. My favorite way to trade is tell me when NVIDIA gets cheap enough so I can put a big position on it that I can leave and without paying attention to it every minute of every day. I would love to sell a put spread with conviction on Intel. Well, Intel, forget it. It's a special case. On AMD, like I did with my sold puts, on Palantir, on NVIDIA, on Bitcoin. I can't wait for the next crash in Bitcoin. The easiest money I've ever made in my life is buying crashes in Bitcoin. And it's a ton of money you make because people hate it and people are so wrong. I can guarantee you that in your lifetime, you will deal with crypto on a daily basis to pay for stuff. I guarantee it. Okay. You can't imagine the applications that are going to come out of crypto. If Facebook succeeds into shifting people into the metaverse over the next 10 years, you will absolutely need to pay in crypto. And here's another thing. Anything around your life that is not trying to go digital, is there anything in your life that is not going to be digital or trying to be digital? Why not money? There's no way cash is king in the future. Have you watched any science fiction movie? They're not like seers of the future. They set the pace. Like, did Jules Verne actually foresee the 10,000 leagues under the water, or did he set somebody on the loose to actually build that submarine type of a deal? So the flip phone Motorola, did that come from watching Star Trek and the communicator? You know what I mean? Some geek was watching, is like, ooh, wouldn't that be great? And then they turn into an engineer and then they build it. Speaking of geeks, I'm an engineer, so I'm not insulting anybody. All right. So whatever it is that you're trying to accomplish, it is so much safer and better and more fun to do it with 300 people. I don't need to sell you any more on that. So let's address a few more questions. Is there anything I missed on the screen that scrolled off the page?
Yeah, let's look at this really quick. And yeah, it is an international community. We have people from all over the world.
All over the place. Oh my gosh, it is so cool. And now I have a lot of people that speak my languages too. So we're having a little bit of fun of that. So the community is diverse in makeup. We have moms, we have dads, we have grandpas, and we have young people. We have both sexes and but from all continents. And so we have point of views. Like if somebody says, I heard such and such, there's always somebody among 300 people that says, I know a little bit more because ... And I can tell you firsthand that ... So rumors are no longer rumors, and we don't trade news. I know people are watching the news. I'm begging them not to tell me what the news is, because I feel I'm a better trader if I'm purely deciding based on facts, not emotions. And I'll give you the perfect example, the CPI report. Okay. How violent was the move on the CPI, right? If you chased it on emotions, you lost a huge ton of money, a pile of money you lost that day. Why? Well, here's my take. Why didn't I listen to the news? Because A, the CPI could not tell me that inflation ended, right? So I know we have inflation and it's high, and the CPI could not have told me otherwise. And even if it did, I know the fact that Powell said he doesn't care. He wants months and months of changing CPI numbers for him to change his mind. So the number, whether hot or cold, is not going to change the two facts. One, the Fed is raising rates, and two, we have inflation. So why would I bother? watching the news and get freaked out and chase this tick and chase that tick. I knew there was news, and that's all I needed to know. And I was ready to handle the price action up or down. And I had a plan. If this happens, I do that. If that happens, I do that.
Right. And keep in mind, folks, right? Like the market changes pretty quickly. And this is really where you have the value where everything happens. You get immediate updates on any trade, anything that can happen, regardless.
So if you're a fan of charts, if you're not a fan of charts, you're going to become one. You know, I was a completely fundamental trader, and then over the decades, I've incorporated charts. I've tried the usual MACD and all of that. Whatever technical indicators that work best for you, stick with them and specialize in them, and we could use your expertise in the room. I have people that specialize in this and specialize in that and specialize in this. I don't know the MACD. I mean, I know the concept. I could never make it work for me, so I don't look at it. Other people do. Some people love the TTM squeeze. Hey, help me out. Some people love the VWAP. Help me out. Some people love Ichimoku. Help me out. Some people track the algo inflows and outflows. Help me out. And they all post their unsolicited. Boom, Krailman, you see them, Solus, bunk, 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 bunk. They trade, they post, and everybody knows who's posting what. After a while, you'll get the hang of it. So you're saying the stuff moves fast. This was Friday, or whenever, 13th. Whoa. So imagine doing all of this all by yourself. Imagine that. That's crazy, absolutely crazy. And to make it crazier, we go down to 15-second charts. And I'm going to show you something. If you don't believe in the machines being in charge, I want to remember what number. I called it the concrete wall effect. Let me see here. I'm going to go to 5 minutes. This is the S&P futures contract. Oh, there they are. Okay. So if you know what the SPX is, this is the contract that tracks the SPX. See that comment right there? Concrete wall. Okay. So a few days ago, we were watching the price action, and I saw something I've never seen before. Never seen before. Look at it. Look at where it is. Right. So it was, I'm going to go to 1 minute and try to find, it's so fun watching these charts, and we learn something new every day. It's like, wow, check this out, how it happened. Somewhere here, something happened that caused me to say, hopefully I can find it, because it was on a 15-second basis. So we're going to have to be lucky in finding it. Meanwhile, let me know if you come across questions while I waste time on this one. It's fun enough. 15 seconds, those are very fast candles. And every time I do them, I tell the people, I'm not going to be able to find it. To control your emotions, because 15 seconds are pretty violent. And you would be more tempted to go and buy a call when you shouldn't, or buy a put when you shouldn't. Anyway, there was like a 10-minute stint where the 15-second candle was like to the fraction of the penny flat. It was unbelievable, to the point where I thought that this was a good point in time that I need to mark. And the level spoke very well, and it was pivotal. May have been here. May have been here somewhere. Darn it. I was hoping to catch it. It's not easy to go back and find it. That was a fun bunch of candles. I posted it on Twitter somewhere. It was so unusual. It was like somebody took a knife and go, okay, let's get these out of the way. It was incredible. I can't let it go. Okay. Am I bearish or bullish on oil? Bearish. Easy. Easy. I shorted oil every pop and won every time, including last week. And how did I short oil? I shorted for the sect, for the class, the members. I shorted Exxon and Oxy at the top. So if we look at Exxon, would be probably easier to see. We caught this drop by naked puts. We were long naked puts. I ruined mine by ruined it like it was only a 3x rather than a 7x or whatever they got. Is because I tried to sell a diagonal, and I got stopped out at the maximum profit of that diagonal, which was not the maximum profit of that trade. So I made a lot of money, but I could have made more. Oxy, same. At the same time, was short Oxy and Exxon. Just before that, I shorted the USO by credit call spread, which worked. And since then, I shorted the XLE for us. It was tough. I shorted it 3 times. I shared it once, twice maybe. Fourth times, my fourth time was last week, and I took some heat. I shorted it the day before it exploded higher. So I took immediate losses, but it was a credit call spread. All I needed is and it did happen in my favor. So that last spike hurt me temporarily on paper, but I didn't capitulate, and I ended up winning anyway. So it is, in my opinion, it's a bunch of malarkey that oil is going to be over $100 for too long, because we're going to ESG investing, and by law, we are limiting the use of consumables. So demand's going to get crushed. But the argument is that, okay, fewer people are going to be selling oil. I know the whole Arab world is going to sell, and Russia and Iran, they're going to be selling every drop in Venezuela, every drop of oil they can make, because most of them, that's all they do, and that's all they can do until they switch and pay for their socioeconomic environments. They need a source of income other than oil. So they're going to be cheating and producing more than they should be. That's my thesis. I also think that oil is going to be under 60, if not this year, in the first quarter of next year, because by design, all the car manufacturers, not one or two or three, all of them said they will have no fossil fuel cars. They said they are going to have it. I don't believe them, but they said they're going to have it. No fossil fuel cars in the next, 15 years. I don't remember the number. So, and that's a giant chunk, transportation, and of the actual consumption of fossil fuels. And we now Zoom more, we commute less, we fly less. Those are facts. They're not my opinion. You can go to the websites from the government, and they'll tell you travel is not back to where it was before the pandemic. And that's 2 years later, and travel usually grows with time, right? So we're shrinking by not growing. And so all of these, where are you telling me that oil is going to be exploding over 100? It just doesn't make sense. And it's the biggest problem of the inflation. So that's what Powell is trying to destroy. We'll see. Until I'm proven wrong or right, I'm shorting every rally that becomes extreme. And the way I'm shorting it, I'm doing it very gently. So I sell a call spread, I buy a put or a put spread at extremes. So my chances of getting blown out are minimal. So that's my belief in oil. What's with this double gap? What is this? XLE. So in case you didn't know, XLE, 44% of it are two stocks, Exxon and Chevron. If you want to play the Exxon earnings and the Chevron earnings, you can do it via the XLE, so you won't have a one-to-one relationship to their options. What's with this double gap? So let's mark it here. That's September 28th. By the way, Exxon and Chevron, excellent companies. I said to go long those in the pandemic when they were paying 9%. Exxon was paying 9% in dividend, and Chevron was about 7, almost 6.5. And they were in the toilet. They were down here. I said, those are blind bargains. Buy it. Buy shares. Up here, no way. What are you doing? What are you chasing?
When was it that this guy Buffett bought it? When it was like 60?
Who?
When Warren Buffett bought, was it Chevron? And
Warren Buffett is not buying to make money off the stocks. That's the problem. People read, oh, Warren Buffett is buying, therefore I should be buying it too. Warren Buffett wants the cash flow of the company. So if he had his choice, he would buy the company itself. And I think he's making a bad deal. Now, respect to Warren Buffett. He is I'm I'm not in the same league, which is the point I'm making. Because you and I are not in the same league, why are we trying to trade like him? He is not trading. He is investing billions in order to buy a cash flow. He's not investing in the stock price to make money off it. So chasing a billionaire into a position to take over a company is not smart necessarily. So if you bought with him from here and you have a cash to winnings, what are you expecting? You have a double on your hand. What do you want? What is your end game? Where's your exit strategy? So I'll give you an example. I told you I fight for a sport. One of my sparring partners, a big guy, I hadn't seen him in a long time. A few months ago, I saw him out of the blue. I was like, dude, I haven't seen you forever. He goes, yeah, I work for an Oxy subsidiary. I'm a crane operator. And he said, we haven't been done this well in a long time. He said the P&L is doing very well for his company, but he said production is down 30%. Now, those are his words, not mine. And it's a subsidiary of Oxy, and I don't know which one it is. And he's a crane operator making 6 figures part-time working for them. So take the information with a grain of salt, but I bet you if you dig deep, you will find out that the company P&Ls that are involved in making money off of this run in energy are only making money because the energy price is high, which is artificially high because of a war in the Ukraine, which is not going to be there forever, and rhetoric from everything else around it. So if the price of oil is temporarily high, as I suspect it is, and it falls back to normal prices or at least below 70, what's going to happen to the P&Ls of these companies like Oxy? So that's the question mark. That's why I'm not saying go out and short them. I'm saying don't chase them blindly because you see a headline that Buffett is doing that. Because even with the threat of a Buffett buyout, now he has the room, right? The last headline was the government said it's okay for you to get more Oxy. That headline hasn't come out. So we're waiting for, yes, I will go in and thank you, government, for letting me take over the company kind of a deal. There's that looming headline. So if you want to short oil, maybe you don't short Oxy because of that one headline. When I say short, I never mean selling the stock outright. Please don't ever do that. In the age of Reddit out there, you cannot do that for a minute. You remember the first rule of taking risk. Do you know what it is? I'll give you a minute. Answer if you can. I'll give you just 10 seconds. What's the first rule of taking risk? When you go out to take a risk and you're a saint, if you're not Travis Pastrana. So what's the first rule of taking risk? I don't see the answers other than here. If you have people on YouTube, let me know if you're coming up. Nobody's there. Minimize it. Okay. Know all the risks. G. Define your risk. Karen, right. You need to know the maximum loss. You need to know the maximum loss. I'll give you an example. Travis Pastrana jumped out of a plane with no parachute, hoping his friend would jump behind him with a parachute, hug him, and deploy for both. That is terminal risk. Okay. His maximum loss is death. I can't take that risk. If my maximum loss is undefined, I don't take the risk. And when you short a company outright, your maximum loss on paper is an infinity symbol. If you short a company, I don't know if you know how shorting works. Let's say you have 100 shares of Oxy, and I say, you know what? You have 100 shares of Oxy, lend them to me. I will return 100 shares of Oxy. If I think the stock is going to go down, I borrow your shares, I sell them, and the stock goes down, and then I buy them back lower, and I returned 100 shares. Meanwhile, I made money off the difference. I sold them at 104, and I bought them back for you at 80. I made a lot of money. What if it takes off, and Buffett says, I'm buying it for $300 a share? That's just a fictitious number. I'm just giving you a scary number. You don't know how high the stock will go. You don't know when you're going to have enough shares available for you to buy and cover your short. You don't know if the calls are going to be trading so you can buy calls and cover your short. You don't know any of that stuff. Until you know all of that stuff, your infinity, your risk profile on that trade is the infinity symbol. So that's unlimited risk, liquidation risk. So let's say you have $100,000 account and that trade carried a risk of 10,000, and then the stock quadruples like BBBY does every once in a while, or GME did, or all of those meme stocks. And before you know it, the company, your broker says, you know what? I don't care what you're going to do. I'm going to liquidate everything to get you out of that trade. And before you know it, your entire account is done for. Poof, gone.
Right. There are trades you could even.
Those are low odds risk, but it exists, and that's not for me.
There are trades that you can even like end up owing the brokerage money.
Yes, but then good luck trying to catch any lawsuit and blah blah blah.
No,
that's
yeah, I mean,
worse.
but yeah, that's why you have to be careful. A big
Yeah.
shout out
So
here
if you want
the-
to short a company responsibly, you can't put a stop loss. Maybe you get
Just by
get
puts.
filled. Maybe you get
Right.
you can't. The stop loss is not a guarantee. So if a stock is hard to borrow, Good luck. So anyway, I'm just telling you real risk. Otherwise, why didn't these hedge funds that have billions of dollars put a stop loss like you say they can? If a hedge funds with billions of dollars goes belly up because of Reddit, guess what? You too can go belly up because of Reddit. In fact,
Yeah, you
So-
have to be careful there. Big shout out here, Arjun, newest family member. Let's go.
all right, I gotta go. Is that good enough questions? Do we have any looming
We haven't,
questions?
well, let's do last call. All right,
Last call.
call. Everybody, throw in your questions. We
Let's
have
go.
Nick
Hit me.
here
What's
live.
the meaning of life?
Let's give him a couple. Let's give him a minute though, or two. Because of they have to type it out. So, but yeah, basically, last call here for questions. Basically, your last call here. All right, folks. And let me, Nick. These are all these charts and everything. You're doing that the whole day. Is it the entire day though? Like,
I'm logged in before the market opens. I try not to talk until the market opens because talking 9 hours a day is taxing on the voice box. So I'm in there all day while the market is open. And so if you want company, you have 300 other people that are in there earlier. I have about 100 people that log in way early and 100 people that linger after. Do I document my picks, the percentage winners or losers? So, gee, it sounds like you're looking for a trade alert service. While I would love to give you my trade alert service, I would rather you learn. Everything is on paper, friend. You want, you can go ahead, go back. I know I did a list for last year for Benzinga, and all the trades are written up in your chat rooms. So they're my trades are on record. Yes. You're welcome. My thought on AMC. I would rather that stock disappear off the face of the earth just because of the amount of anguish and destruction it's doing to people who don't know what they're doing. It's an excellent trading stock. Excellent. You know, if you're an actual trader, that's the kind of stock you want, because you can deploy your technical knowledge and trade the hell out of it and beat the competition that is winging it. So this is tradable. So if you want to trade it actively, we will trade the hell out of it in the middle of the day. As an investment, it's not for me. The only way I would make this company work as an investment for me is to turn them into esports arenas. I think you can pack it with teenagers on Fridays and Saturdays, eating snacks all day while having a competition, giant screen esports. Simplistic approach. I don't know what their plans are. I hate the fact that they did this ape splits. So in order for, I did homework reading, I was like, what the hell is that split between this and ape? It turns out that the way I read it, the one that makes most sense, it's a backdoor way the company have opened its own bank at the risk of diluting ape. So now at any point in time, they can issue stock to get cash so they don't have to go out and borrow money. Meanwhile, the people who hold the stock get shellacked every time. So be careful investing in a company that has sales that are doing this. That is not a healthy company.
right. We have some questions here, Nick.
Jose, you missed it. I had a whole spiel about AMD and Intel and NVIDIA, so you're gonna have to watch the replay.
Yeah, we did
unfair
go over that.
through that. I had extensive opinion on that.
How is volume? So this question is from Ariel. How is volume accumulation help us in price entry on options?
No problem, Jose. How does volume what?
How is volume accumulation help? I mean, I'm just reading the.
So I think they mean they want the secret sauce. I won't share the secret sauce. I'll put you through on to. So I think what they're talking about is open interest and volume in options. So if you want to forecast the price of stocks, you can study these two columns and make a living at it. And I do that every day for us, every day, especially Mondays, Wednesdays, and Fridays. These two columns. They sometimes price will be here with an hour to go. I would say I see this pushing up before the close. And if you buy calls, you make a ton of money because those calls are cheap. So that's for the close every day, not for this contract. I'm just showing where it is. So the concept of the Max Pain theory, not Max Pain theory, I don't trade Max Pain theory. Concept of Max Pain theory is in effect. And I speak to it in length during the session. So if you want to learn that concept, you have the opportunity to do that. Jose, no problem. I just didn't want, it's unfair to go back and revisit something I spent about 20 minutes on. I bought 100 shares of Tesla. Now I am nervous. Trading to trade with plans and eliminate the feelings, but I was a weak moment. So let me ask you this, Nico. What price did you pay for Tesla, if you don't mind? $215. Did you buy it here or here? On the way up or on the way down? Friday. So here. Okay, that's better than buying it here. You thought you were buying into support, so you didn't do wrong. Okay, Nico, you didn't do wrong. Did you buy a full position? Did you mean to buy 100 shares, or did you want 100 shares out of, say, 300 eventually? Again, I'm trying to help everybody learn from you, so kindly offered your position. So here, let me answer that for you. If Nico meant to own only 100 shares of Tesla and Nico bought all in, that was mistake number one to a degree. You scale up, okay. Went in full time. So that was a weak moment. That was the weak moment, not the fact that you chose 215, the fact that you went all in. So now Nico went all in. If I were you, and it's a long-term position, and you want to sit in it because you feel stuck, you should go out and consider selling covered calls. And what is let's use this as a teaching moment. All right. So this is what happens in the chat room. And that would be the last thing I do, because I can hear them screaming in the background. They need me. So this was the chat room, live room tomorrow. And Nico said, help me out. I bought 215. Tesla is going into earnings now. I'm nervous. I'll say, okay, so we'll go in here. 215 calls are $6. So if the market opens up, I can go out and sell 225 calls in Tesla that are $400. I can go out to November and let me see here, 300, and sell 285 calls and collect $100. So you bought 100 shares, so you can collect $100. So that would reduce that would hedge you for $1 worth of downside. Let's say this is a position you want to hold for a long time. You go to January and you sell a $340 and you collect 174. So what I'm saying is you can sell covered calls. It's a limited downside protection, just limited. But what can you do with that? You can use the money to buy a put spread to protect yourself. That's the only thing I can tell you. My fingers are crossed for you. Tesla, I don't know if you were here earlier or not. I want to scare you into, I don't want to scare you into panic. I wish you had done partial position, because it is in danger of triggering and holding this giant, massive head and shoulders. It has a lot of support, and I mean a lot right here and a lot more down here. So this scenario means the SPX is below 3,000. But it is a huge head and shoulders. AMD and NVIDIA were here about 4 months ago. And when I said that, nobody believed me. Well, now the markets have fallen 30% since then. So the likelihood of another 30% drop in the market is less than what we were when I was making the conversation. It's not impossible, just less likely. So you have to be open that this is going much lower, and you have to protect yourself and or put yourself a stop loss, saying, you know what, if I lose X%, I should be out. I'll re-engage lower. That's the kind of thinking you do. There's also a stock replacement strategy, which I'll mention and we'll end with it. The stock replacement says, you know what, I do like my shares. I'm worried about the next month or so. So let me get my money back out of Tesla, and you sell your shares and you sell a put below and you buy a call or a call spread above. So you sell your shares, you take the risk off the market. You sell a put, you collect money, and you say, okay, I'm out here, but get me back in at 175. So you collect $800 for that. With that $800, you buy a longer dated debit call spread, because it's not enough to buy a call. That's $2,300, or you could. And the call spread, you would spend $800 on like a $10, $15, $20 wide spread. So then you're now still long Tesla without any money on at risk immediately. So what happens if the actual stock falls through the put you sold? Well, then you buy shares at 175. Well, guess what? You owned them at 215. You didn't lose from here to there. You just bought them back down here and you missed out on all of this. Meanwhile, the position of puts sold will lose money, but those losses are paper losses and they will disappear if you take the assignment of shares. If you book the put, you say, oh, shoot, I don't want it anymore. You buy it to close it, you're going to lose thousands. But if you don't, you just buy the shares back lower. So that's a stock replacement strategy. This is not a stock recommendation right here. These are options that somebody that owns shares and wants some temporary protection. All right, Rodrigo, my friend, I am out of time, out of energy. I have to be back here doing more homework in a little bit. So how about we call it a day?
Right. No, definitely. It has been a good session here. Nick, let's get some closing remarks here on your end. By the way, folks, I'm just going to stick around here for a couple of minutes for the folks that joined, and I'll show you the chat room, what you need to look for, the Sunday session recording, all that stuff. But Nick, give us some closing remarks here on your end.
I'll leave it on a good note. How about to say everybody is looking down, including me? How about new all-time highs by February?
Whoa. What? You know,
But that doesn't mean you go buy calls. There's going to be a washout moment. Scary up or scary down, I don't know. Something is going to have to change in order to force Powell's hands to say, okay, I've done enough.
all right, there you go, folks. Eugene, no worries, man. Nick's going to be there tomorrow in the chat room. Big shout out there, Nick. Appreciate all you do here for the
I
traders
appreciate
out
the
there.
community. Thanks for putting this together, and I'll see you all tomorrow. Later.
All right, there you go, folks. Nick Shaheen, lead trader at the Options Inner Circle chat room. Really gorgeous with his time here with us today. Since 1 p.m. we've been here. It is 3, right? It's like 3:30. So yeah, it was definitely Nico. Don't worry, I'll put my email there for you guys really quick. But yes, this was a great session. I'm glad everything was able to, piece everything together here with Nick and for you guys to be here. So for all of you guys that joined, really quick, this is the chat room. This is the blue chat room, static chat room. It's open 24/7. And these are the two channels that you need to look for, right? So you have the Inner Circle chat. That's where everybody's posting, and including Nick. And then you have Nick's important messages, right? When you click Nick importance messages, there you will see, let's see, this is the Sunday recording. You have the other videos there. And this is where he's going to post the link for the morning session. This is for Sunday, where you put your tickers, and he's going to review them like he did and post the recording there. So let's see, this is how it looks like, right? He puts a market commentary and then live session. This is the link that you need to use when you join the live session, where he is sharing the screen, talking to people like a webinar style kind of thing. And it's open pretty much from 8:30 a.m. all the way till about 5 p.m.-ish. And that's pretty much Monday to Friday. So that's the link. Below you have all the indexes charted, SPY, Qs, IWM, and futures as well. So let's just look something here really quick, right? So that's the chat room, right? The other thing are these videos that everybody should go through, right? If you're a new trader, or even if you're, been trading for a little bit, this is very good. It just explains everything in detail so that everybody can understand what are options, puts, call options, what is a spread, credit put spreads, when to book or set a stop loss, when and how to book profits. This is all risk management right here, these two videos. Below SPX, why we use XPX over SPY for this, and then what type of trade is best, right? And how to pick what type of trade. You have credit put spreads, credit call spreads. There's so many different, you can sell puts, you can do so many different things. And it's important to know everything that you can do as a trader, right? It's more than just buying calls and buying puts pretty much. And yes, all the members have access to that, right? Okay, so let's see how many, so we're about 108, so 108 tickers, right? So let's just check out one of the recent videos. And if anybody does have questions, you can put them there in the chat. I just want to see a little bit of this video here.
Good morning, 10:16. After an amazing week, amazing by like truly the word amazing. What's going on these days? I don't remember them happening in the same fashion or for the same reasons. If you're frustrated about the price action, don't beat yourself up. The experts are completely lost. At least we have a plan on the shorter term, and we're trying to avoid the big mistakes that the big boys and girls are doing. Go read about how many hedge funds are in trouble because of this price action. So the market makers are completely confused because they make the market and then they have to immediately go hedge their positions, and then they have to hedge to hedge. So I believe that's gamma, hedging their deltas. So it is pretty tricky, but it's not impossible to navigate. Goal number one, avoid mistakes. That's the session here. We have fewer tickers than before. Maybe somebody didn't put their request in early enough, but I checked up until half an hour ago. Okay, first things first, tomorrow, this week, every chart you should put in mind, almost every chart, the statement goes without saying, the low we put in last week must hold, otherwise more pain ahead. So if a stock was falling and had a flash crash in the middle, late in the week, like when the markets just completely collapsed, that flash crash level is super strong. Until it fails, it becomes a pretty impressive catalyst lower. So you can count on it as short-term resistance, but you must put stops below depending on the stock you're looking at. And that goes across everything, including the markets themselves. Also important to know what's going on next week, and this is what's going on. Netflix is the first of the FANG gang, so mega cap, that opens the door for earnings. We have had bank earnings and they have been good reactions, but they don't drive markets. This one will, because it will move this one, it will move Facebook, which is Meta now, Google, and company. Microsoft to a degree, and Apple will move according to this one. That is a concern to me because there's a chance that Netflix is going to be pretty violent reaction. Gut says that there's a chance of big downside, but don't short it, because if I'm wrong, there's going to be a big upside. I don't think it stays quiet, but I bet that the CEO will tell us if indeed the growth story is no longer as hot and the lack of growth is sustainable. If that's the case, Netflix is going to fall hard. Okay? But it's pretty difficult to short it with conviction. It's a pretty violent mover. So you either trade it with a lotto or you wait to trade it after the fact. There's ISRG, I like it, but this one I think will move the NASDAQ in sympathy. And then this one after that. IBM, I don't know, to a degree, maybe, maybe not. I'm interested in American Express because it looks like it's the first of the credit card transactors. So they include Visa, MasterCard, to a degree, Square, and PayPal. Maybe to a larger degree, to a smaller degree, Affirm and SoFi. And maybe Shopify too, if you want to stretch the limits. So make sure to know that if you're trading another bank and Bank of America is reporting, that other bank will move in sympathy. So if you wanted to bet on the Bank of America, I would have used Goldman Sachs. You would have an extra day. This one might even move with Bank of America. So just know it. Like if you're in Las Vegas Sands, if you're trading another casino, Las Vegas Sands earnings might move the other ones. Okay, airlines. We've already had one report. I don't know what it did, but we have another one here. All right, so you have to know the environment. I will have another video tonight, which is the strategy video, and it will be short and sweet and with a bunch of warnings. Our goal is to make small mistakes. Thank you, Fernando. Okay, let's get started. So I don't have a lot of tickers this time, so I'll probably break it up into 2 videos only. First of all is this one. It's ranged, so trade the range. Resistance, support until one of the two breaks away. If you break out from resistance, you get to here. If you lose support, you get to 4.5 or something like that. American Airlines, we have an airline reporting, United, so you have to pay attention to that. Its earnings are not coming until here, so you're going into the earnings report with some positive momentum, which is good, but it becomes harder to break out. And it does have a prior fail. If you're a trend line person, which I am not, you're probably looking at this and seeing an opportunity. And it is a legitimate opportunity. I'm a level guy. I know that this level has been a prior fail, the level before it, prior fail. So when we go into a prior fail level, I would think we would sell off, but that's me guessing. There's an earnings in between it for a different airline and an earning for it later. So pay attention to that fact. If I have greens, I would book them or lock them or protect myself. So Apple, now you've seen the headlines about Apple at 105. Okay, we've been talking for a long time that there are some mega caps that point way lower. We started with Nvidia and AMD, and when I drew arrows on a weekly chart months ago, I bet you not a lot of people paid much attention, and now they're close to those arrows. Nvidia can still go to two digits. So can Apple go to 105? It can. Alone, I don't think so. The market correcting, yes, it can be there this week. Is that my forecast? I hope not. But the market is teetering. We should get a bounce. Exit on the bounce, because after the bounce, the likelihood of breakdown and going down to 105 becomes much greater. Yes, if we do bounce, the correction would become much more likely. But we'll treat it one day at a time. Meanwhile, what did I say first? The low that we had last week, look how violent it was. This is like February 24th low on the market. When the war in the Ukraine broke out, we flash crashed, and the day we closed green, super green. You remember that? And then what happened later? We lost that support after a few days, or I can't remember how many days. And we broke down from it violently. Remember those? That is the same makeup. We crashed. It was an amazing crash after the CPI. The CPI had nothing to do with it. It was just a technical crash. It was just a trigger. And then we bounced really hard and we closed super strong that day. Remember the violence that day? 224, February 24. Same behavior for the whole market. So look, rally, came back, made a new low. Rally, almost exactly the same size. It may come back, and if we lose the low, we will get to 128 this week. If we make a new low. That's why I'm saying the bottom from the CPI reaction, I hate to refer to it as that because that was not a CPI crash. It was just a price action. Look, are these all the same size or close to it? Okay, here's one, right? I'm going to move it to here. I'm going to move it to here. I'm going to move it to here. Maybe we have another one here. I doubt it. This one should die into it, a 144, 145. But we watch for it. So now we have a box. If we lose the edge of the box, we're going down to 125, 124. If we bust out of it, we could get to 155. I would use it to exit, not start longs. That's Apple. And it's important because Apple represents the market. So whatever you just heard me say here, you can apply to the S&P, IWM, everything. If you lose the low from last week, it becomes a catalyst lower. And then on the bounce from that drop, it becomes the wall. So let's say Monday, Tuesday, whoosh, we jump back up, then becomes a wall from here to 138. Okay. Affirm, there is no short-term bottom. Look how close it is to the Thursday low. Was it Thursday? Whenever. Wednesday low. Thursday, CPI low. I'll refer to it as that, although I hate it. It has support below it and support below it. So the time to panic from Affirm is gone. Now you decide whether you own it for the long term or not. If I own 2 or 3 companies like it, I should choose 1 or 2 tops. So if I own Square and Affirm and SoFi, that's too many of the same stock. and or PayPal and Square, also kind of the same thing. So pick one that is valid. These are hard bounces, so I would tend to go long into a firm into 16, then get out. I think the business model is fine. It just needs the stock market to stabilize. This one is mid-range. It has a lot of resistance above. It seems like it has a lot of support below. There's nothing to do here. And of course, the Thursday low from the flash crash. This is an Australian stock. It's holding up well relative to its lows and highs. It is stuck in a range just like the other one. So this is support until it's not, and if it's not, it fills the gap, but there's no evidence of that. Elliott wave dots tell you that it might go there. So the head and shoulders that looms, and the Elliott wave projections, although not a forecast, tell you that there's a gap below and a gap above. You hope it goes to 27. Awesome. Yeah, there's a little gap right there, so why not? You have $5.50 from there. It's doable. Okay, Ambarella, I don't remember if it's still a GoPro company or not, basically. There's no bottom. I'm going to a weekly to see a bottom. There are several stocks like this one. So we are right here, which has been in contention since 2019. Make that 2018. Good grief, make that 2014. You get the idea? It's too old to matter surgically. If you wanted to pick a bottom, 46.4, that candle right there. These are weekly candles. On that week was extremely violent. So was this one. So was that one. So closer to 45 would be a better base. Doesn't mean it's a bottom, it's just a better base. AMD, that's the arrow I was talking about. This arrow has been here for a while, at least in discussion. Once they lost the 100 mark, they tried to recover it a couple of times with 108 and 104. I said the bears have it. Every time somebody asked me, do you want to be long AMD? I said I would rather be long the market. If AMD is rallying, so is the market, because they have special circumstances, the semiconductors. You've heard me say that many times. Also, we have this arrow now from a head and shoulder sideways, which I don't give as much weight as this one. So AMD in the 40s, very likely, especially if the markets fall. I thought we would get down to the 50s. Here we are approaching the middle of them and maybe even warning about the 40s. It makes a decent value here, but the assumption is that the market's fine and the market is not fine. The market of semiconductor, we still have a shortage, blah, 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 blah. All the talking points that have been nasty are there. When you shut down the world for a year, you're going to suffer consequences more than a year. So this is the disruption we have here. Okay. So company all by itself is fine. Technically, it's the environment, and technically, it's pretty bad. This is a place to add. I've had this for a while, but it's a wide place. So add meaning I would probably say start. I'm not long AMD. If I wanted to get long AMD now, I can start nibbling. The last time AMD crashed, it was during the pandemic. I sold puts in the 20s. So I can't sell puts in the 20s yet. This is my practice platform from E-Trade. I do not recommend it. It's full of bugs. I can't collect much premium in the 20s for 2023. But if I wanted to own shares in the 30s, I can sell the 35 or 37.5 put in order to own shares. So if I'm willing to own 100 shares, I can collect $130 as of Friday to buy shares, maybe. And if I don't, I made money out of thin air. That's the way I would trade AMD, personally. Upside or not, it's limited income, but hey, better than just trying to time a perfect entry. Amazon will move with Netflix. Look at the size of that inverse cup and handle. So you do not want to lose this floor from Amazon, because you will be in the 60s, if not lower, which would be a mathematical impossibility. Why? Given the actual money it makes, the sales, for this scenario to come true and stay there, that means Amazon's going to have to lose 40% of its sales. In what environment this year will Amazon lose half its sales? That with everybody being employed by everybody, the definition of full employment in the US is 5% when I studied in the MBA. Let's say it's now 4. We are fully employed as a country. As a country, we are technically fully employed. In what scenario would all of these employed people stop using Amazon to destroy half its sales? We would need a catastrophe. Something natural, actual war, something to stop people from spending. And Powell cannot do that overnight. He's been trying. We will need some incredible shock to the spending ability and willingness of the US citizens for Amazon to get cut 40% in sales. That's my estimate. I'm not a financial analyst. I'm just telling you the mathematical scenario. When you have this many sales and then the stock is already cheap on a price to sales basis and it comes down to here, that means your sales are going to get demolished. Would suggest that. And I just don't see it sustainably. So we might crash and bounce. If we do crash, I'll be selling as many puts as I can. That's my strategy. Is this, I forgot the name of the company, Arapaho? No, I don't know who APA is. Anyway, APA is doing this, although I wouldn't expect it to happen in this environment, so be careful. This is pretty good price action. What is this? Beware of this potential. Okay, so this came to fruition. So we did this. We can take this arrow out. And now we're doing the reversion up to the place from where they fell. This looks pretty tough. But if they take it out, it's a catalyst. And now you have a catalyst here. If you lose the, I guess I should have done that. If you lose this, you will do that. And this will make a better entry point. Apache, thank you. So it's an oil company. I think if I owned an oil company and I made a lot of money, I would exit. ARK. Oh, that was a weekly chart. Okay, so let's see on the 120. Choppy. I would not be long here, personally. It's going sideways. They're trying to find who's in control and the big range. I would not be in long. So ARK, like Apple, like the whole market, like blah, 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 hold last week's lows or come down lower. It looked great for a rally. It came immediately and then the market pooped itself and then it went down with it. Remember, I wrote it up. It delivered profits overnight. So now you need to hold this or you come down a couple of bucks. And it's heavily dependent on Tesla. I think 10 or 12% of it is Tesla. So whatever happens to Tesla's earnings. So this might be a good, relatively safe, indirect play of on Tesla's earnings. So if you wanted to bet up on Tesla without much damage, it's cheaper to play this guy with the options here. Because when Tesla reports, its implied volatility is going to be huge. So if you wanted to buy calls and puts in Tesla, you're going to pay a lot of extra money for no reason, and you would lose it immediately. So betting on Tesla's reaction is cheaper probably through this one, ARK. Okay. Having said that, the fundamentals of ARK are spread across a whole bunch of good companies. At least the top 10 are half of the ARK, and they include pretty good companies. I don't know much about this company. I know that on a daily basis, it looks like it could bounce. Descending channel above a gap. I'm not about to be a hero into a company like this. What does that say? Trade the range. Yeah, I can delete that. Trade the range and chase the breakout or breakdown, and boy, did the breakout come. So according to Elliott wave, yeah, you might have a rally. According to Nick, you have a lot of resistance into 18 plus or minus 50 cents. So if you break out of first line is 17.50 or 19, you can get to 24. Or you buy the dip into 14 to ride it up. That would be my strategy. Buy the dip into 14ish to ride it back up and break out, or chase the breakout after it happens. BAC, big bounce in a bad week. That's pretty good. I would have been out. The idea that banks are rallying that hard is never attractive to me. They're great companies, good management. Look at this downside scenario. The trend says this is an area where you sell. They report Monday before the open, so why are we talking about that now? I don't know. Okay. Hopefully you're trading this one, not investing in it. This company is toast. Toast from a fundamental basis. Don't take my word for it. Look at its sales. This is the opposite of Amazon. Why would I invest in a company that cannot stop its sales from shrinking? In other words, yes, it could revert to some other high, but it's just a tradable high. I wouldn't touch it with a 10-foot pole, to be honest with you. Technically, if you lose this low, you can be in low fours. Also, technically, this seems like a pretty good floor because last week was pretty strong and it can bounce to 530. So if you're actually trading it, you need to be in the live room to actually physically trade this range. So don't dabble in it. Boil. Can't remember what the natural gas. Almost similar statement with regards to the floor that we have. It is a floor until it's not and then becomes a trap door. So 30, 31 doable if they lose footing with support at 40. So if it dips into 40, you want to catch it there for a swing long into 55, that's fine. I think there are sellers between 56 and 59. If you go above this guy, you might get to here. And this is a violent chart, so don't be a hero. You need to be actively trading it. BPT, that's probably res as well. So good price action on a bad week. If you take out 14, you might get to 16. Descending trend says not so, you might dip. So if you want to buy the dip into covering that gap to swing trade it up, that's better. Sellers versus support, that's the bottom line. BTU, not an obvious entry point to me. I think it has support at 25, maybe through 24.5. There is support here, right there. There is support, but if you lose it, you will come down to here, make better entry point, or chase the breakout from here because you have upside potential. So for me, it's in no man's land. Either lower or higher is the entry point. If you wanted to go long into last week's lows, that's fine. Just make sure you have a stop. And everything I say, by the way, doesn't apply through earnings. If this one has an earnings this week, whatever I said will be dictated. The end result of that will be the earnings reaction, and it's binary. You don't know, I don't know, nobody knows how they will react to the earnings. You might think you know because you think they're going to deliver a great report. I'm telling you now, please stop that nonsense. Don't be silly. The earnings quality has almost nothing to do with the reaction the next day. I can prove it to you mathematically, but I won't. Flagrant low on this one. Lose that, you're going down to here. Until then, you have sellers in here. So the battle is between super strong support, super strong seller, ping pong until it breaks out, and it looks like it has earnings coming. So that might be the catalyst. Please step away from this company. Management is out of its mind. They had the world by its gonads, and then they let it all go. During the pandemic, when it went to high heaven, Kramer, I remember, was saying, you got, meat plants are in trouble. You got to go to Beyond Meat. I was like, where's the logic? The only reason Beyond Meat has actual meat, non-meat to sell is because it's been sitting on the shelf forever. Why would a meat company not have people to produce and Beyond Meat have people to produce? It didn't make any sense, and he caused people to chase it up to high heaven. The stuff is not for everybody. It's a niche market. I buy it, I eat it, but it's not a requisite for me. I buy it when it's on sale. That's basically what I do. And it is, the chart is broken. You have to study the company. and the CEO told you things are not that great recently. So I'll believe them and I'll step away from investing in it. You want to actively trade the chart, fine. If that's the case, you have a low here. Any breach of that low, you have an unknown low below that. Until then, you have a gap at 1480.15. Maybe you ride it up there. Okay, CCJ, I believe there was a question on that one. Okay. Oh, I hid them, that's why. I was like, I know there was a question. Interesting. I could have sworn there was a question. There it is. Okay. The member question was 15%. It fell 15% on some buyout news. I had unusual activity a month ago. Irrelevant until now. Unusual option. The unusual option. Someone bought calls. No. Someone bought calls. Someone sold calls. Somebody made money off of. Everything is old news. Trade the chart in front of you. It fell into support. You want to be long, fine. Against the support. You lose the support at 20.3. You're committing yourself to testing the 1918. So trade the chart. It's not a happy story yet. And whatever happened a month ago is dead and buried. It's dead and buried. That news is gone. Now they're trying to find footing. They do have some recent support, but not great. But it is support. So if I didn't get out yet, I don't get out here. I see how it handles that support. Charter Communications, every line we drew is coming to fruition. COVID low, it's below it. It's just crap news, right? This is not good. So if I wanted to see a floor, I have to go back to
All right, folks, and that was a little of the Sunday session that we do with Nick Shaheen. This is just part one of multiple videos that he will upload every Sunday. And these are the tickers that the chat members posted, right? That they want to hear from. Those tickers are basically here in this spreadsheet. Let's just see whichever one here, a random one, dish. Right, so you will have, I mean, imagine going through the entire video and then like saving all these screenshots and putting it up for you guys, right? So basically every ticker has its own chart. And from this, you can, you get a full response from this and through the video as well. So this, you can keep it and also make sure to notate those levels, right? Resistance zones up there as well, all the notes that he will put in. So yeah, this is all of those tickers are in this spreadsheet. Then the education videos, those are for the chat room members. Feel free to email if you want access to them. I could send you the link. All right, that was Sunday session. So yeah, you can find everything here related to Nick in this live room. The live session, which is Monday to Friday, 9 to 5, and also market commentary, Sunday recordings, which are posted there as well. And for those that are asking, yes, the laptop will be sent after the money back guarantee, and make sure to fill out the form you will receive after signing up. Ahmad and everybody else that signed up there, make sure to fill out that form with the address that you do want the laptop to be shipped to, right? All right, folks. So I think we had a pretty good session here. I want to thank everybody for being here, for attending, and also big shout out to all the new members out there that joined here. You're going to have a great time there with Nick. Make sure that you are there tomorrow, early in the morning. It's going to be a volatile market, okay? And we need to be prepared basically for whatever happens, right? So being in the chat room, very important, or as early as you can with the rest of the chat members, right? So that we can assess the market together. So that wraps it up here, folks. Thanks a lot. Have a great day, and we'll see you guys tomorrow in the chat room.